Grace has been part of some special moments over the years. Helping to make them, well, more memorable. Even when they're a little bit unexpected. And with 100 years of great taste behind us, you can be sure we'll be making even more moments for 100 years to come. Grace, taste that moves you.
Grace coconut milk. It makes your rice so nice. Make Thai curry in a hurry and try it in your drinks and desserts. Grace coconut milk. Rich, creamy, and delicious. It's a taste the whole family will love. Bring the tropical vibes to your next family meal with powdered, creamed, or canned Grace coconut milk for the love of flavor.
Join the rhythm, enjoy the flavor. The taste that you savor, share with your friend and your neighbor. We're made in Jamaica. Join the rhythm, enjoy the flavor. The taste that you savor, share with your friend and your neighbor. We're made in Jamaica.
Grace Tropical Rhythms, join the rhythm.
Grace coconut milk. It makes your rice so nice. Make Thai curry in a hurry and try it in your drinks and desserts. Grace coconut milk. Rich, creamy, and delicious. It's a taste the whole family will love. Bring the tropical vibes to your next family meal with powdered, creamed, or canned Grace coconut milk for the love of flavor.
Grace has been part of some special moments over the years. Helping to make them, well, more memorable. Even when they're a little bit unexpected. And with 100 years of great taste behind us, you can be sure we'll be making even more moments for 100 years to come. Grace, taste that.
purchase pending. Make a call, Trevor.
Hello?
Trevor, you get the screenshot with the dress on me send?
Yeah, me see it. Are you that man?
Me need a little top up doing a boobs.
Sharon, me top up your GK1 card last night. Just use a Visa card and make the purchase.
Hey, Trevor, you a top up boss, you know. One thing with you, you not leave me hanging.
Use your GK1 card to make purchases in store locally, internationally, online, or to withdraw cash at ATMs. You can add cash to your GK1 card by receiving a Western Union money transfer. And now, you can add cash onto your GK1 card over the counter at select Bill Express locations island-wide. Visit mygk1.com for more details.
Grace coconut milk. It makes your rice so nice. Make Thai curry in a hurry and try it in your drinks and desserts. Grace coconut milk. Rich, creamy, and delicious. It's a taste the whole family will love. Bring the tropical vibes to your next family meal with powdered, creamed, or canned Grace coconut milk. For the love of flavor.
Join the rhythm, enjoy the flavor. The taste that you savor. Share with your friend and your neighbor. We're made in Jamaica. Join the rhythm, enjoy the flavor. The taste that you savor. Share with your friend and your neighbor. We're made in Jamaica.
Grace Tropical Rhythms. Join the rhythm.
Good afternoon, ladies and gentlemen. I am Gordon Shirley. As chairman of GraceKennedy Limited, it is my pleasure to welcome you to our 2023 annual general meeting. I would like to extend a special welcome to the 51 shareholders we have here in person today, and the 43 shareholders who are participating in this AGM online, and these numbers are growing by the second. Thank you for joining us. This afternoon's meeting will present the company's financial performance for 2022, and our shareholders will vote on the issues at hand. Last year, marked Grace Kennedy's 100th year in business, and we celebrated with our Grace Kennedy family around the world under the theme, Our Story is Your Story, celebrating the past, shaping the future. Thank you all thank all of you who made GK 100 an extra special occasion for the company. In 2022, Grace Kennedy delivered a commendable performance, demonstrating the resilience and agility in the face of a challenging global macroeconomic environment. This is a testament to the dedication and commitment of the team here at Grace Kennedy, who continue to deliver value to our customers and strong returns to our investors. We are building on our foundations in the food and financial service industries to transform Grace Kennedy to meet the future needs of the communities that we serve. On behalf of the Grace Kennedy Board of Directors, I would like to take this opportunity to express our sincere appreciation to all of our stakeholders, the Grace Kennedy team, our customers, business partners, shareholders, and the communities we serve around the world. We would not be where we are today without your trust and support. It would be remiss of me this afternoon not to take a moment to recognize that Grace Kennedy has lost another stalwart. As you know, on January 4, 2022, we sadly lost Jimmy Moss Solomon. And just over a year later, on February 16th of this year, his brother, Peter Moss Solomon, passed away. Peter served Grace Kennedy with distinction from 1958 until his retirement from the board of Grace Kennedy Limited in 2008. He is missed by the entire Grace Kennedy family. Please join me in observing a moment of silence for Peter. Thank you. May his soul rest in peace. We now ask those of you who are here in person and those of you who are online and who are so inclined to please join us in prayer. To present the prayer today is Ms. Shari Webb, who is one of our Grace Kennedy Foundation scholars, and she will lead us. Shari?
Good evening, ladies and gentlemen. Let us pray. Heavenly Father, we come to you today to give you praise and thanks for many things. Firstly, we'd like to thank you for life and for the opportunity to be here today at the Grace Kennedy Group's annual general meeting and for protecting us as we made our way here today. We ask that you protect and cover those who are still on their way here and those who are joining us online. We also pray over today's activities that they go smoothly and according to plan, and that you cover the participants and the attendees as we share in this glorious occasion. We also ask that you continue to support the GK team as they continue to support communities, the environment, and the advancement of national development through their Grace Kennedy Foundation and the Grace and Staff Community Development Foundation. All of these things we ask of you, including the continued success and growth of the Grace Kennedy Group and its shareholders, through your Son, Jesus Christ. Amen.
Thank you very much, Shari, for demonstrating why we are so very proud of our scholars and for discharging your function in today's event so extremely well. Mrs. Gail Moss Solomon, who is well known to all of you, our General Counsel and Chief Corporate Secretary of Grace Kennedy Limited, will perform the function of Corporate Secretary at today's meeting. Madam Secretary, will you please advise whether a quorum is present?
Yes, Chair, the quorum of 3, as provided for in our articles, is in fact present.
Thank you, Mrs. Moss Solomon. I invite you to take us through the protocols for today's meeting.
Thank you, Chairman. Good afternoon, everyone. These are the protocols for today's AGM. Half an hour has been allotted for the question and answer or Q&A segment of the meeting. We encourage you to identify yourself by name when asking questions. During the Q&A, we will take questions in the order that they have been received. So we will first answer any questions we already received via email prior to the meeting. Then we will take questions from the floor, from those who are here in person. Finally, we will respond to any questions which we receive via email during the meeting. Every effort will be made to address all questions this afternoon, time permitting. Thank you to everyone who has already submitted questions. For those participating online, please note that there is still time to submit questions via email. These should be sent to gkinvestor@gkco.com. For online participants, please also note that to avoid undue disruption, your microphones have been disabled. We invite you, however, to use the chat box at the bottom of your screen to interact with other virtual participants and to make comments. Please note that questions should not be submitted using the chat. Only questions sent via email to gkinvestor@gkco.com will be addressed during the Q&A segment. Shareholders and proxies who are here in person should have all received a paddle. The paddle should be raised for the following reasons: to move or second a motion, to indicate your vote on each resolution, or to indicate that you wish to ask a question. Shareholders who are participating in today's AGM in person, during the Q&A segment, please raise the paddle to indicate you would like to ask a question, and a microphone will be brought to you. When you registered for today's meeting, whether online or in person, you would have either identified yourself as a shareholder or a non-shareholder. As is customary, only shareholders or their duly appointed proxies are permitted to move and second motions and to vote on resolutions. Non-shareholders are not permitted to move or second motions or vote, but you are, of course, encouraged to ask questions either in person by raising your paddle or via email to gkinvestor@gkco.com. For our shareholders online, you may move and second a motion by clicking on the Raise Hand Reaction button located at the bottom of your screen. Shareholders online, please vote on resolutions by clicking the For or Against button, which will appear on your screen. Shareholders who are here in person, please raise your paddles to vote. Shareholders will have 30 seconds to cast their vote, after which the results for each resolution will be announced. For our shareholders online, in the event you experience any technical challenges during today's meeting, you may reach out to our team for assistance by calling 876-932-3160 or send an email to gkinvestor@gkco.com. Finally, a recording of today's AGM will be uploaded to the GK website and YouTube channel tomorrow. Thank you very much for complying with these protocols, and we look forward to a successful meeting.
Thank you, Mrs. Moss-Solomon. The notice of today's AGM was published in newspapers in Jamaica and Trinidad and Tobago, and was also posted on the GraceKennedy's website and the websites of the Jamaica Stock Exchange and the Trinidad and Tobago Stock Exchange. The AGM notice also appeared in our 2022 annual report, which is available in electronic format on the GraceKennedy website and in hard copy here at our GK headquarters at 42 to 56 Harbour Street. May I please have a motion that the notice of the meeting be taken as read? Thank you. And Mr. Staple seconds. David Rose and Mr. Staple. We will now
From run a boat to running a kitchen, there's only one brand, Grace Ketchup.
makes you want to go out and do some cooking this evening, right? Madam Secretary.
Yes, Chair, we have unanimous online for the votes, 100% in favor.
100% in favor. The results are in, and I declare the motion carried. We are very pleased to have the directors of GraceKennedy Limited present with us this afternoon. Let me introduce them, beginning with our CEO, Mr. Don Webby, Group Chief Executive Officer. Mr. Andrew Masado, Group Chief Financial Officer. Our director, Dr. Paris Loyi Jr., has joined us online. Mrs. Indiana Minto Coy. I expect Indiana to join us during the course of the meeting. Mrs. Gina Phillips Black, Chair of our Corporate Governance and Nominations Committee. Mr. Peter Williams, Chair of the Audit Committee. And our newest member, Mrs. Vanessa Rizzioli, who has traveled all the way from UK to be with us. One of the highlights of our annual general meeting is always a presentation by our CEO, Don Webby. I now invite Don to present the performance of the company for the year ending December 31st, 2022. He will be joined by Andrew Masado, our Group Chief Financial Officer. Don?
Sorry. Thank you very much, Chairman. Good afternoon, everybody. Good afternoon, shareholders, friends. Chair, how you introduced me, my presentation have been one of the highlights, but I'm sure the true highlight will be the reading of the auditor's report. So good afternoon again, everybody, and it's good to see the AGM with the level of attendance in person. And Mr. Staple, I was saying to Mr. Staple that, Mr. Staple, when you're in my position, I have to keep my overheads low. But I can see that you're going in the opposite direction. I'm sure you have earned it. So thank you very much again, everyone, and good to see everybody this afternoon. Let me start off by introducing my team, and as I've always said, team together, everybody achieves more. Can I ask my team to stand? Masado, Andrew, Gracious. I'm not sure if Andrea is here. Andrea is a world traveler. She's in charge of international foods. Gail Masalomon and Naomi is on vacation. Ladies and gentlemen, shareholders, these are the leaders of the GraceKennedy group of companies. Thank you very much, colleagues. I also want to use this opportunity to recognize the board of directors, and I'm not going to single out everybody, but I have to single out our chairman. And you know, sometimes you hear me use the words, we are blessed or I'm blessed. And let me tell you something, and I make no apologies, that Professor Gordon Shirley by far is one of the best chairpersons I've ever worked with. And Chairman, thank you for your support. You're outstanding. And let me also recognize my good friend, I still call her Vanessa Hutchinson. And we go back a very long way. I joined GraceKennedy in 1995. And at that time, I would go to meetings with Mr. Diaz, who was the chairman and CEO at the time, A.R. Diaz, who is still with us. He's 92. Peter Solomon, and of course, my mentor and friend and person who shaped my career. Who is here? Douglas, you understand? Douglas O'Rain. So I would go as the youth in the room to learn. And who was there in that room from Duncox? Vanessa Hutchinson with Chris Bovell. And Vanessa, when I look at your career over the years, being a top lawyer in the UK with Freshfields, I feel very proud of you as a Jamaican and somebody I've known for over 25 years. And it's great to see you joining the GraceKennedy board. I know the board and GraceKennedy means a lot to you. So thank you very much for agreeing to join the board. So last year was a very special year for us, GK100. Our story is your story. And I'm going to show you some pictorials of our celebration. One of the first things that we did, shareholders and colleagues, we had our church service to give God thanks. Without God, GraceKennedy wouldn't be where we are today. And you would see me there with Monsignor Ramkisoon from Mustard Seed and Archbishop Ken Richards. Then you see another version of me celebrating with the confetti and cutting the cake, having a good time. So we really, all of us are having a good time. Then you would see in the column there, Ding Dong to the left, our brand ambassador. Ding Dong was showing us how to do the stir fry and the bounce. I must confess that your group CEO was doing something other than the stir fry, and I wasn't bouncing to the beat, but sometimes it's good when you can laugh after yourself. So we were really having a good time with our staff and celebrating. And there you see our other brand ambassador. I don't remember what Shelley-Ann and I were discussing, but obviously it was something that we found very funny. And Hansel Parchment, our Olympian, who is also a brand ambassador for GraceKennedy. Let me use this opportunity also to congratulate Shelley-Ann. She has been such an outstanding brand ambassador for winning the World Sportsman of the Year award. And you can give her a round of applause because I'm sure she's watching. She's such a simply outstanding lady, and those of you who heard the speech that she gave was just unbelievable. I wanted to show this slide at this stage in my presentation. And this slide, colleagues, shareholders, is really a thank you slide to the over 2,000 employees of GraceKennedy all over the world. And as a group CEO, I want to thank all of you personally at our AGM and to our shareholders for your hard work, your dedication, your loyalty, and your commitment to the GraceKennedy group of companies. I know the challenges that we have been through for the last 3 years with COVID. And I really, from the bottom of my heart, as the leader of the company and as group CEO, thank you, thank you, thank you, the 2,000 employees that we employ, for your dedication and your hard work. And by the way, GraceKennedy, we achieved a 90% vaccination rate, which I have not heard any company reporting that high vaccination rate, and that allowed us to function in a seamless way. We also showed our employees, our team members, appreciation by offering what we refer to as the GK share offer. And it was the highest take-up of over 1,000, I think it's about 1,400 new shareholders of staff members for the GraceKennedy group of companies. And, you know, Teddy Alexander is here. And I know your dad and Mr. Kennedy before believed in our staff having a stake in the company. So this was really a big move that we have 1,400 new shareholders in GraceKennedy, all staff members. So while 2022 was a difficult year, and I'll get into the numbers, we have a lot to celebrate. This is one that we are particularly happy about. For the second year, we won the Governor General's Award for Excellence. Gina, Chair of Corporate Governance, big up. We are very proud of that. Let me show off a little bit. I've been challenging that's the wrong one, 2021. I've been challenging my team that, listen, every year we're finishing second or third for the annual report. Well, I'm happy to announce that we won the best annual report. And here it is, ladies and gentlemen, best annual report. All right, make sure this reach page 2 in a boss. Best annual report. Congrats, Gail and the team. This is fantastic. I'm really proud of you guys meeting the challenge. And then we also won the RGR Honor Award, which is, is one of the most prestigious business awards for exemplary corporate leadership and expansion in a difficult period. I felt really pleased about that award. And that award, while you see Don receiving that award, it's really an award to the board of directors and all the employees of the GraceKennedy group of companies. Then we continued with the JMA Award, Bureau of Standards Awards, and the Distribution Awards with P&G. And P&G is the leading marketing company in the world, Procter & Gamble, and for us to be recognized in this way. Tamara is here. Tamara, stand and be recognized. Tamara is the head of CBL. And this is us competing with every company in the Caribbean. Congrats, Tamara, and well done. So I wanted to put our financial results in context. And let me say, and most of my executive team or the GraceKennedy team is here, I never, ever, ever externalize results. I never say that the company's performance is below standard because of something external. And in fact, I've learned in my career, working with Douglas and others, that when there's a crisis, Vanessa, there's an opportunity, and I'm always looking for the opportunity in the crisis. But I think it's important in terms of the world has changed that I put our results in context. So, and RGR used the word tumultuous. It has been very challenging for 2022. We speak about rising global inflation, and when we speak about rising global inflation, we normally think about the trading of goods, and GraceKennedy as a food company. But guess what, shareholders and colleagues? I think one of the biggest impact on the GraceKennedy group was actually in our remittance business. Remittances in Jamaica was down by 2%, and of course, we are the leaders in the remittance business in the Caribbean by far. And when we did our analysis, it's because inflation, and you see the inflation rates in the countries, USA, UK, Canada, has never been that high for a long, long time. The disposable income of our Caribbean brothers and sisters was squeezed, so they have less to send home. And that's why, in my opinion, and based on research, remittances in Jamaica was down by 2%, and that impacted our group negatively. Then we speak about the shortage of raw materials and the demurrage and storage costs. What we are seeing, however, though, is a real improvement in terms of the freight rates, which I'm sure you have been reading about. So in the heights of COVID, we were paying $17,000 per container coming out of the Far East, Frank and Andrea, and now that is down to $2,500. So that's a significant improvement. That's not below the pre-COVID level, which was about $1,700. On the other hand, we are still seeing some inflationary pressures for raw materials coming out of the Far East. So it's almost a balancing act, but on a whole, it has been positive. Increasing interest rates, and this has impacted, I would say, most of all, the equity market in Jamaica, where you find portfolio managers are moving from the equity market to the fixed income market, where they're getting 7 or 8% on deposits. And of course, you would say that the GraceKennedy stock and other stocks has been negatively impacted by the high interest rate regime. FX movement, and this one is a very interesting one, and it's a bit unique to GraceKennedy, and I'm going to say it, and then I'm going to show you why. and this is very, very unusual. And I hope everybody can read it online also, right? So the US dollar, the pound, Vanessa and others, actually depreciated against the US dollar by almost 12%. The Canadian dollar depreciated by 6%. However, the Jamaican dollar appreciated by, call it 2%. Now, you can understand if the major currencies around the world is depreciating and the Jamaican dollar is appreciating, it's going to impact the GraceKennedy Group in a negative way. And I'm going to demonstrate to you why in a later slide. But bear that in mind as we go through the presentation. Okay, so these are the audited results. Revenue for 2022, we did very well, I would think. Revenue up 13.6 billion or 10.5%. 56% of the revenue is inside Jamaica, 44% outside of Jamaica. So over 40% of our revenue is outside Jamaica. So think about what I just said a while ago, that if you have your major currencies and you're operating outside Jamaica, depreciating against the US dollar, and you are appreciating in your home country, is going to affect your results in a negative way, despite us putting in place hedging mechanisms. In terms of profitability, we made 10.2 billion, which is, we should be very proud of that. However, that represented a decrease of 1.5 billion or 12.5%. The pie is just about the same as mirroring the revenues. 56% of our profits inside Jamaica, 44% outside of Jamaica. Remember, our target is 60% outside of Jamaica and 40% inside Jamaica. And as I say every year, Jamaica is going to grow and grow quickly, but what we're saying is that our businesses outside of Jamaica is going to grow faster than the businesses inside Jamaica. So the group profits, I wanted to, and Andrew, maybe you can expand on it in your presentation. I tried to what we refer to shareholders and colleagues to normalize the results so you get a better understanding of the operating profits of the group. So what you see in the 2021 numbers is that we had one-off non-recurring gains of about 895 million. Our acquisition of the GK Life from Scotia resulted in a one-off gain on consolidation and acquisition. And of course, the pay protection, which we have been reporting, also resulted in a one-off gain. And then this year, or 2022, we sold our power plant, our interest in our power plant, Pelican Power Plant, for 170 million. So if you were to look at try and normalize it and look at the operating performance of the company, would have been down 6.8%. And of course, for profit after tax flowing through, we made $7.6 billion. Okay, so let us look at 2023. One of the things that, as an exercise that we do as a group, we meet 50 of us, 50 of the top executives of GraceKennedy. We meet 3 times a year to discuss strategic plans, future, and as you heard me say from time to time, what gets measured gets done. And we came up, which I thought was a lovely theme coming through from the 2022 challenges. Building a bright future together through great people, and the great people should be bold there. Our story continues, 101 years, and our story continues. And we are being guided by this for 2023. So what we did in those meetings, we're very focused in terms of how we're going to, I don't like to use the word turnaround, but how we're going to, because we made $7.some billion, but how we're going to improve on our performance. And we came up with really 6 strategic initiatives or 6 strategic drivers, and 20 of us meet every Monday morning to go through these drivers and measure how we're doing against them. And I think that's important when you're leading a company like GraceKennedy, that you have to track and provide strong oversight. So what we said is that, listen, for 2023, these are the initiatives that we're most focused on. We need to continue to grow our revenue, improve operational efficiency. Some of this is short term, some of this is longer term. Andrew Masada is going to share with you new investments that we're making in our food software system, Al Edwards, $7 million SAP for HANA, and our new Oracle Fusion in the financial service division. All of that is going to result in significant operational improvement in terms of efficiency. Customer engagement. So it's not strange for you to see Frank James and myself meeting in the supermarkets to visit our customers, or Stephen and Grace and Margaret going to the Western Union agents, etc. You have to engage your customers. And I would say that's something that is in the DNA of GraceKennedy. Accountability and execution. What gets measured gets done. We need to hold each other accountable. Supply chain and service levels, we need to improve on that. And I already shared with you about supply chain. And working capital and cash management. Mr. Auditor, as I said before, profit is an opinion, cash is a fact. So we manage our cash very, very carefully, especially in a high interest rate regime. So how have we done in terms of these 6 initiatives, and how did our first quarter results look? So here we go. I'm extremely, extremely proud of my team in terms of the first quarter results, and I'm proud to report and pleased to report to our shareholders our revenue performance, where we reported revenues of $39.1 billion for the first quarter, the highest in GraceKennedy's history in terms of any first quarter results. We're up $2.8 billion, or 7.8%. And we saw growth across all big business segments, all business segments. In terms of the profitability, this one is, as I would say to you, Chairman, this one is even sweeter. Profits are up 20.6% for the first quarter. There is no non-recurring item there. This is straight operating improved performance, or $528.1 million. So reported profits of $2.3 billion, increase of 20.7%. And our food business is showing strong growth, especially in the domestic market. So, colleagues, our first quarter doing exceptionally well for the GraceKennedy group of companies. And I am extremely, extremely positive that 2023 is going to be a very good year for the GraceKennedy group of companies. I want to spend some time on our strategy, and you will understand after sharing the strategy with you why I'm so confident that we're going to have a good 2023, and a great foundation is being laid for our 2030 vision. So our strategic drivers, which you have seen before. So mergers and acquisition, as you know, is a strong objective of the GraceKennedy group of companies. Andrew Leroy is here. Andrew, you understand and be recognized. Our head of M&A, Andrew. So we have been doing a good job with our M&A. Signia, which reports into Stephen Whittingham. We increased our shareholdings, and our merchant bank in Barbados is doing exceptionally, exceptionally well. Let me get a photo up. Where are the paparazzis? I like to promote when I can. All right, so colleagues, Catherine Speak, is now a subsidiary. We own 70% of Catherine Speak, and we now own 100% of 876. So your company, GraceKennedy, has the 2 leading spring water brands in Jamaica. And we have a really, really good strategy for both brands in terms of growth. And boy, you can see already that the summer is going to be very hot. But both brands are expected to grow double-digit as we move on. And we have just scratched the surface because we want to start doing variations in terms of, well, let me not share too many secrets for our competitors. But I'm very proud that GraceKennedy, in the spring water brand, we own the top 2 brands. And it's the 2 best waters in Jamaica. I learned as the group CEO, Mr. Ren, you'll understand that you can't show favorites. So I say both brands are great brands. Colleagues, this is a game changer. This is a game changer for the GraceKennedy Group. At 2020, we were not involved in life insurance anywhere, zero. In 2021, we bought Scotia Insurance Eastern Caribbean Limited, and in March 2023, we completed the acquisition. So GraceKennedy, your company, is now in 13 islands as it relates to life insurance. And I can say this, that the acquisitions are accretive because both companies that we acquire were already profitable and generating good revenue. And here we're doing to support it, Haven Technologies. Haven Technologies is actually a subsidiary of MassMutual. And MassMutual, for many you know, is a 23 billion company. So, Stephen, as we say, we're playing in the big league with MassMutual. Again, I don't use this word very often, but the GK Life acquisitions from Scotia and Haven Technologies is going to be a game changer for the GraceKennedy group of companies. We're going to be introducing technology for life insurance that has never been seen before in terms of acquiring customers, managing and distribute unique life insurance experience. And you're going to be hearing a lot more of GraceKennedy in this space here. It's going to be one of our major profit contributors in the future. In terms of strategic alliance, you'd have read that we launched 3 mutual funds. The fund, it was seeded by the shareholders, and we have about 21 million US in there. Mr. Whittingham, I know people like Mr. Stapler and others will be investing in the mutual fund. So that 21 billion should be about 30 in a short space of time. Right, Mr. Stapler? Another area of strategic alliance, Scotia Protect. Scotia Protect is actually seeing a double-digit growth. It's doing exceptionally well, double-digit growth, and ahead of our expectations. And Scotia and GraceKennedy were extremely pleased with this partnership here. This is a very interesting one, and let me tell you why. I speak a lot about digital transformation, and I speak about, McKinsey said to me 3 years ago, Don, if we don't transform our businesses digitally, you're going to be a dinosaur, and it's about survival, Vanessa. And they're correct, but that's in the future. Let me tell you something. I was on my way to Senate last week, Friday, and I drove past the ABM for Scotia Center there, and the line was longer than any line for Disney World. I mean, Jamaicans, as you see it in terms of ABM, the lines are so long. We are cash lovers. We love the cash in our hand, and we can count it. So if you think about it, right, 93% of the remittances coming in Jamaica is still cash. 93% and 7% is digital. However, listen to this very carefully. Digital is growing at over 30%. Over 30%. But cash is not growing at all. So you can do the numbers to say that 93% is going to be over a period of time reduced. Having said that, our strategy, Grace and Margaret, we have to build up more locations. So right now we have over 200 locations, and with the addition of Courts, with a strong, strong brand in Jamaica, very, very strong brand, we're going to have over 250. And Margaret, I would expect by July, will be well branded in the Court stores. And I think this is going to be a big plus for our Western Union business. I'm really excited about that, Margaret and Grace, and marketing and branding is going to be key for us. And I think the Courts brand and the Grace brand will work well together. Strategic alliance, partnerships. And this is one that it's very exciting, GK1. I've had meetings with stakeholders, let's put it that way, all over the world. And when we demonstrate GK1 to them, and we have invested or will invest by Andrew, by the end of this year, over $1 billion. Their excitement is even more than ours, and these are international companies of what we have been able to accomplish as a Jamaican company in terms of developing technology in-house. We have our own digital factory, and we did this. As you said, this is, Stephen, this is built by Jamaicans, GK1. So when I show you this video as Jamaicans, and I know you listen all over the world, please feel proud to be a Jamaican, that this was built by Jamaicans, what you're going to see. So let's go. Clap then, man. Clap, 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 clap. And by the way, I'm not drinking Captain Street because it's my favorite. You'll be surprised to know how my team members ask me why I never drink 876 in terms of Captain Street. All right, so colleagues, this is something that is very special to us at GraceKennedy. It has a lot of potential. Our next strategic move is going to be launched in Guyana and Trinidad, certainly before the end of the year. And this is kind of the feedback that we are getting in terms of our remittance business, where we have people doing remittance transactions Sunday night at home, 8 o'clock on GK1. So, you know, we said that we're never closed, eh? We're never closed. And the growth rate of GK1 has been, I don't want to give my competitors too much information, but let me say it has been phenomenal in terms of the growth of GK1. And we're going to continue to invest very heavily behind GK1. Again, strategic alliance, you have been reading about Link with NCB. We're almost there in terms of signing. Well, we have signed the agreement. Now we have some technology changes and modifications that we'll have to make. But again, this is going to improve or increase our digital reach, GK1 and Link. So our strategic alliance is not only financial services. Many people may look on this and say, wow, GraceKennedy working with Nestle. Yes, we're working with Nestle. Nestle is an international company. They have some great brands. We have a company, World Brands, that has been formed, Nick, many, many years ago, where we concentrate or we distribute our principal brands so they get the focus through World Brands. And Nestle and Frank will tell you, we have been having great discussions with Nestle in terms of a strategic alliance. And we have already started April 15th to distribute the Nestle products for selected supermarkets and wholesalers. When Frank was discussing it with me, I smiled because I kind of grew up on Milo without aging myself. And you can see some very strong brands there. And I believe that this is going to work well, not only in Jamaica, but when you form a relationship with an international company, there are other discussions that we can have. I want to say to our shareholders and to the media, and we feel very strongly about it at GraceKennedy, that manufacturing is a competitive advantage for the GraceKennedy group of companies. Let me say it again. Manufacturing is a competitive advantage for the GraceKennedy group of companies made in Jamaica. So we have invested over 2.5 billion Jamaican dollars in improving our manufacturing efficiency over the last 5 years because we believe that we can compete and be a competitive advantage in manufacturing. What gets measured gets done. We have set ourselves a specific target that we measure. Frank and I and Zach will go through. We're at 30% now of our production from our manufacturing plants are exported, and within 2 years we want to carry that to 50%. And that's the underlying thinking of being more efficient, where we merge NALPRO and our canning plant to form our new plant, NALCAN. And I tell you, I toured it over the Christmas, and it's really looking like a first world, first class manufacturing facility. And you see some of the products there that were produced through manufacturing. And Frank, I want to congratulate you and Andrew Wildish and the team. It was a big exercise, but it's done. And we're expecting great things coming out of the, I call it the new factory, NALCAN. I like to show this slide. Being the chairman of JAMPRO before I retired, we speak about made in Jamaica. And, you know, sometimes I'm in the trade. Andrea Kai is here, head of international foods. And especially in the UK, Andrea, when I walk to the supermarkets in terms of Tesco and other supermarkets, and I see a Jamaican flag on the label, Vanessa, and it don't have nothing to do with Jamaica. I believe that that's one of the reasons I say manufacturing is a competitive advantage, and we're going to be manufacturing more products through our manufacturing plants. But have a look at some of what we manufacture in Jamaica. You see our jerk sauce, which I may be a little bit biased, but our jerk sauce is the best in the world by far. Right, Indiana, who has joined us. Let me repeat that again. Our jerk sauce is the best jerk sauce in the world by far. So these are some of the products that we are manufacturing through our five factories. And there's a pipeline. I went to the Denby plant, and the innovation there is bursting, where we're going to be launching new products. But I think it's important for our shareholders and the media and others to recognize some of the products that our factories are producing. When you look at the bacon that we have there, our bacon is the leader in the hotel industry in Jamaica, and is really supporting the tourism industry in Jamaica. Here's another initiative. If we're going to be a #1 manufacturer, first class, first world, you've got to have a good energy policy. So you'd see there, yours truly and Frank breaking ground, $3 million US investment for an integrated system using solar and LNG. Franco is well underway, and 80% of our needs will be supplied by the new plant. And HILO, GraceKennedy is here. We're also going to be using some amount of solar for HILO. And this is just the start of our long journey of where we are going. But you have to ensure that you have a competitive energy cost if you're going to expand world class. Retail, very happy with HILO. Had a fantastic year last year. Really, really good. We opened the store in the grill. Miss Kennedy, sorry, I'm marrying you after yourself. HILO in the grill is unbelievable. I think they're about 50% higher of expectations, and it's doing well. We're being well supported by the locals and the tourism industry. We want to add another supermarket in Mandeville very shortly. And if you look at the long-term vision as part of our Vision 2030, we want to carry our 13 stores. I don't know why Catherine and Frank put 19, but I'm going to round it up to 20 by 2030. But HILO is doing very well, and those of you who shop at HILO, let me thank you. This is another point that I wanted to raise with our shareholders. I've been getting a lot of feedback. So we announced on March 1st that we're going to do a buyback of the GraceKennedy shares. And of course, the board approved it. One of a part of the process, or to start buying back of shares, is that we need approval, Gina, which you have been working with us on, from the Trinidad and Tobago Securities Exchange Commission. You need approval. You don't need approval from Jamaica Stock Exchange. We wrote to the TTSEC seeking approval. They have responded. So we will respond to their queries, but I'm really hoping that we can put our buyback scheme in place. I mean, when you look at the current PE ratio of GraceKennedy, it's 10.46 to be exact. That's very, very low. And when you talk about a book value of just 1, it's very, very low, and we feel very strongly, and I'm being polite when I say very strongly, that the GraceKennedy stock is valued significantly more than it is trading at now. Mark you, this is not unique to GraceKennedy. Most of the stocks on the Jamaica Stock Exchange are trading below value because of the high interest rate regime, and portfolio managers are moving from the equity market to the fixed income market. But we need to ensure that whatever we can do, that we get the right value for the GraceKennedy stock, or the economic value for the GraceKennedy stock. We do that. Obviously, the first thing is for management to produce more revenue and profits on a sustainable basis and execute on our strategy. But when you have these numbers here, I'm even more convinced that the buying back of shares is the right thing to do to reward the shareholders for the buyback. There's been a lot of discussion. I'm not sure if everybody's reading the press, Teddy and others, about fraud, etc., etc. We are very proud at GraceKennedy about, and Peter Williams, our chair of our audit committee, is here. Everton McDonald, our retired director, did a fantastic job. At GraceKennedy, and I said it before, we don't benchmark at GraceKennedy against, I hope I don't sound too boastful or anything, but we don't benchmark against other companies only in the Caribbean or in Jamaica. We benchmark against the world's best. And if we benchmark against the world's best must measure us. And for the last 12 years, we have engaged the Institute of Internal Auditors, which is the voice of internal auditors for the world. And I'm happy to say that for the last 12 years, GraceKennedy has achieved the highest rating achievable as a Jamaican company. And that has become a part of our DNA. It has become a part of our culture in terms of good controls, good systems in place, and our staff doing self-audits as we move along. And this is something that I'm very, very pleased about. And it's not by coincidence. It's about hard work and focus in terms of controls. And Peter Williams, I want to recognize you have taken the baton nicely from Everton. And I feel very confident that this will continue in terms of being rated the highest. Thanks, Peter. I'm going to miss your reading of the auditor's report. But okay, I'm winding down now, colleagues. So one of the things that I have often been asked, you probably hear me say it already, that 100 years, that's fantastic, and so on, so on, so. We have 2 entities in Jamaica that, while they maybe not be on the front page of the various media houses, they, over the years, have contributed significantly to the strong GraceKennedy brand that we have. And both entities I hold very, very dear to my heart. And in fact, the Grace and Staff Community Development Foundation, I currently chair it now. But if you look at the GraceKennedy Foundation, I'm now the patron of the food bank. And ladies and gentlemen, colleagues, I've heard some very, very sad stories about children, as I refer to them, and Prof. Shirley will understand, attending university. And some of them go 2 or 3 days without a meal. Some of them struggle to get a cup of tea. I hear some of them drinking cough syrup just to keep awake and get their energy. It's very sad. Right now we are feeding about 4,000 meals, and with the $12 million, I challenge my team. I want to double that, Indiana. here on campus. I really believe if we're going to have a better Jamaica, we have to have our brightest minds being fed. That's basic. That's basic. And as a patron, I'm going to be working very hard to increase that 12 million so we can reach that objective of doubling. Then we have the ocean cleanup, which we're leading now in terms of the environment. I went for a tour with Caroline Mafood, and they took me to a gully they call the Barnes Gully. And ladies and gentlemen, I could not believe it in terms of the garbage. I don't know how anybody can live in an environment like that, but we are playing our part. We are playing our part to improve the environment. The tuition we're providing for children. Douglas O'Rain is here. He will understand, I learned it from him, that every one of those students there, I go through their results. As a group CEO, I use my hand and I go through every one of the 1,333 results. And colleagues, let me tell you, we have some bright, what you call in Jamaica, Vanessa Pickney, 6 years, 7 years, scientists coming from the inner city, and without us, they would not have had that opportunity. And that is something, as a company, I'm committed to continue to ensure that we help those that cannot afford a good education, Education should not be, a good education should not be a privilege. It should be a right in Jamaica, and I feel very strongly about that. Champs. Who is happier, the winning captain or Don? Anyway, it was great. I want, and I said, somebody said to me when I was going through my presentation, Don, why have this under CSR, right? And it's really what I would describe as a win-win-win. We've been sponsoring Champs for 16 years. And as I said in my presentation there, it's an investment in our youth, our schools, and an investment in sports development. But I think it was at AGM a few years ago, somebody asked me, you're spending over $100 million on Champs. And I think they used some big word. I mean, what is the empirical? This so on thing. So obviously, Don, I have to go get some empirical work. So in 2022, we did a survey about Champs, and it was confirming what we always knew. We're talking about 90% of the people surveyed said Champs, GraceKennedy sponsor Champs, has resulted in a better society. CSR, 90%. And it says 90%, another 90%. And there's a detailed study resulting in a more in a more powerful brand equity for the Grace band because we sponsor Champs. And when you talk about the Grace thing, 16 years, we are 101 years, Prof. And the first recall, especially for the younger generation, is Grace and Champs. Is Grace and Champs. So we are very pleased with this sponsorship, and we are going to continue. Now, you have heard me say that we want to list on a first world exchange, and GraceKennedy is a first world company. You heard me say that we are a global consumer group, etc., etc. I have been having meetings with investment bankers all over the world and financiers all over the world about GraceKennedy expanding and world class and so. Colleagues, every single investment banker, every single financier, second line is, what is your ESG policy? So I said to Gail, Gail, you're now in charge of ESG, come up with a policy very quickly. Because as McKinsey said to me about digital, I'm saying to all of you, ESG for GraceKennedy is not going to be a nice to have. You have to have it if you're going to be an international company. So Gail and her team, they have been having discussion with NASDAQ, which you can see the strategic alliance there, and a report will be done, the impact report will be done by the end of 2023. But if you can read it from here, have a look at some of the bullet points there. And this is interesting for what we're going through in Jamaica with about the drought. Environmental, we speak about water stewardship. You know, it's about rain harvesting and that kind of thing. Under social, we talk about equity, diversity, and inclusion. Consumer financial protection. Governance, we speak about privacy and data security. Product quality and safety. And I'll say this. While ESG and the questions coming to Don and the team about environment and social governance, if we have a robust ESG policy, we're going to have a much more profitable company on a sustainable basis. In other words, this is not a nice to have one thing. This is going to be a win for the society, going to be a win for you, the shareholders, and it's going to be a win for GraceKennedy, because we're going to be able to produce, as we move towards our 2030 vision, sustainable profits going forward. Gail, thank you very much. You have been doing a fantastic job as it relates to ESG. Okay, I love this saying, and I put it up for my executive team when I was presenting the 2030 vision. It says, individually, we are one drop. Together, we are an ocean. Individually, we are one drop. Together, we are an ocean. We have set ourselves as a vision, which I believe in very strongly. And I believe that this great company is going to realize that vision as we move throughout the years. Our 2030 vision, we all agree that it was a little bit lengthy, but it is very profound. To be the #1 Caribbean brand with Jamaican roots and a global reach by building on our core pillars of foods and financial services, to provide you, our shareholders, with strong returns and improve the quality of life of our team members, our greatest asset, our customers and our communities. Colleague shareholders online and in the room, this is your vision for the GraceKennedy Group. It's your vision. You're owners of the company. And this is where the executive team and the board will be taking your company to realize this vision. Here are the what get measured gets done, which we are tracking. 70% of our revenues and profits outside Jamaica. We're going to be producing revenues of $2.1 billion, up from $934 million. Our profitability will be $250 million. And as I said, and we have appointed investment bankers already. We have had discussions with Citibank and Broadspan and others about listing the GraceKennedy Group on an international exchange, about acquisitions to realize the growth position. Andrew, he has been having discussion with PricewaterhouseCoopers. There's going to be a lot of accounting work to be done with new accounting standards. That discussion has already started. So the journey has started in terms of the GraceKennedy Group, and I've already gone through ESG. So shareholders, 70% of your revenue and profits outside of Jamaica. We're going to have a $2.1 billion US company, and the profitability will be $250 million. So in closing, and I'm going to invite Andrew Masado to come and brief us on the numbers. I want to thank our GK team, our customers, business partners, shareholders, and the communities we serve around the world. GraceKennedy, we have had, as you have seen, a very positive start to 2023. The unwavering loyalty and commitment of all our stakeholders to GK's vision is certainly instrumental in driving our growth and setting us on a path towards continued success. And as I've said over and over and over, and I feel very passionate, I feel very deeply about it, is that for GraceKennedy, we're 101. But I'm going to assure the shareholders and my team members that the best is yet to come for this great company. Thank you very much.
Hello and good afternoon, everyone, fellow shareholders and other observers. So I'm going to give you a little recap of the financial highlights for 2022 and a little preview into 2023. And I'm also going to go into a few more specifics about the financials. So let's look at our highlights. You'll see there that we earned revenue of $142 billion in 2022, up 10.5% or $13.6 billion. We had strong growth in our food division, earning over $11 billion of that increase. And then our profit before other income, you'll see, is down by 11%. And one of the main reasons why we see that being down is pressure on our margins. As we had earlier indicated, there are a number of headwinds that we did face. Things like logistics challenges, supply chain issues, and inflation, which would have impacted our margins. So that's part of the reason why you see reduced profit before other income, which is really the core operating profits. Profit before tax, you'll see down 12.5%, still earning over $10 billion, though, in pre-tax profits. One of the highlights here, though, even though overall it's down, is our associated companies and joint ventures have been showing improvement. So some of our factories, Deere Industries, we saw Signia out of Barbados and our Majesty factory in the US, all showing improved profitability. So while some are down, some of our companies are up as well. In terms of our net profit attributable to shareholders, $7 billion in profitability. Our assets continue to grow. We're now over $200 billion in assets, a growth of $1.2 billion for 2022. So a strong asset base here, and our stockholders' equity over $70 billion. And we'll see that from this strong equity position, we're able to pay out more dividends. So going into the numbers a little bit more to give you some context on the numbers, and Don had spoken to this earlier. In terms of 2022 and 2021, there were some non-recurring gains that occurred in both years. In 2021, we had $895 million in non-recurring gains from things like acquisition gains and grants, and then a smaller non-recurring gain in 2022 from the sale of our energy plant. And so if you were to normalize these results, take out these gains from both years, you'd see that on a normalized basis, the group was down by about 7.7%, so a single-digit decline compared to the decline you saw overall of 14. So that's kind of some context to the results. Going back, though, to our equity position and what has led us to be able to do, from a strong equity base as well as good cash flows, we have been able to pay out a dividend of over $2 billion for 2022. It's the highest in our history and really a record for our 100th year in operations during the anniversary celebrations last year. One of the things I want to say is that we've also continued this trend into 2023. So first interim payment was 50 cents in April, and then on the 16th of June, we'll be paying a second interim dividend of another 50 cents. That's going to be $1 at the half-year mark, $1 per share in dividends, and that's the highest we've paid out at a half-year point. So we continue to return good cash flow to our shareholders for 2023. You can look forward to that payment next month. Then, in terms of our segment performance, these are our individual areas of performance. You'll see that for 2022, we have shown growth in 3 of the 4 segments that we operate in. Money services was down somewhat, and we did allude to that earlier in the presentation. Our group CEO did mention that the high inflation rates in the main diaspora markets would have impacted disposable income of our remittance customers. And so that overall reduced remittance flows to Jamaica and would have impacted our remittance companies, down by 6.7%. You do see, though, that all our other business segments are up by over 10%. And in terms of insurance, it was our first full year of operations through GK Life, and they contributed to improve revenue for insurance. We also saw our general insurance companies, Jamaica, GK General and Key Insurance, showing good growth as well. And then for banking and investments, we did see improved performance for First Global Bank. Their revenue grew, their loans to customers grew, and their deposits also grew, which contributed to improved performance there. And in addition, on the investment side, you'd have seen that GK Capital would have brought to market 3 IPOs in 2022, and that contributed to improved revenues as well. On the food side, both domestic and international foods showed a double-digit growth in revenue for 2022. If we go now and look at the profit before tax of the segments, you'll see that 2 of our 4 segments showed improved performance. In relation to money services, I spoke to that in terms of the revenue side, which would have flown to reduced profitability. On the insurance side, what you would have seen is that there were some non-recurring benefits to Key Insurance that got some benefit in 2021 when they adjusted their reinsurance program and got a kind of one-time or non-recurring benefit. So 2022 didn't show that same one-time gain. In terms of banking and investments, you'll see 52% growth there. Mainly, again, as I said, improved performance of the bank, as well as our GK Capital company that brought those IPOs to market. On the food side, some growth, but not as significant. What we experienced, as mentioned earlier, is some pressure on margins as we had rising cost of raw materials, some logistics challenges, and supply chain issues. So that depressed somewhat the growth level to single digits on the food side. However, one of the things I want to point out is that you'll notice, this is a 2022 bar, that all 4 of our business segments are now earning profits of over $1 billion. So better diversification of our earnings and no reliance on a single segment to bring in all the profits. So that's really some of the highlights in terms of performance for 2022. Now, getting into the balance sheet side of things, what's our financial position? Well, there were 2 milestones for 2022. The first one is that the red bar, which represents our assets, we now have assets in excess of $200 billion. So a strong asset position backed by growing investments in fixed and intangible assets, as well as improved growth in our customer loan portfolio. And then the other milestone would be in terms of equity, the yellow bar. We're now over $70 billion in equity, which gives us a strong base from which to reinvest in the business, as well as pay dividends to our shareholders. And then just to highlight a third item, you'll see that our debt-to-equity ratio, which is this line, the percentages, a fairly steady debt-equity position of under 50%, of just between 39 and 40% of our in terms of borrowings rate. So fairly conservative in terms of not overborrowing and incurring high interest costs. Now, I want to highlight, as I mentioned, part of the reason for the growth in assets has been our investment in fixed and intangible assets. So when you look at our funds allocation, how we used our funds to reinvest into the business, you'll see here that for 2022, we invested $3.8 billion. And it's in a range of different assets. You would have heard about our factories that we want to grow their manufacturing capacity to export more. And we invested over $560 million in our factories for 2022 alone, or the merger of two of our factories. We put up new facilities, and we've also been reinvesting in our equipment, plant, and machinery in our factories. Also, for retail side of the business, we invested over $500 million in improving the look and feel of our stores, putting up a new store, as well as giving refurbishments where necessary. And they're also part of the solar project. So you'll see that some of our high-lows stores have high solar power generated. Then on the technology side, as mentioned earlier in the presentation, we are investing heavily in technology. Over $900 million in new software, as well as over $200 million in equipment, computer equipment, to drive that. And that's also including our digital factory spend. So a range of areas in terms of fixed and intangible assets being invested in. Now, the next thing I want to give a little highlight on in terms of capital expenditure is just to delve a little bit more into how we spend on investment technology. So some technologies forward-facing, facing to the customers, so like the GK1 app, that's really for the customers to use. But then behind the scenes, you won't see it in the newspapers, but behind the scenes, we have to be investing in improved efficiency using technology. So our core operating systems that run our businesses behind the scenes we need to continue to invest in. So SAP, the S/4HANA version of the application is being implemented this year. The total spend on that is going to be approximately $6.9 million US, so kind of switch currency on you here. And this is going to drive more efficiency across our food businesses and make sure that we are using the most up-to-date technology. On the financial service side, you'll see Oracle Fusion. This is our software that drives the financial services accounting systems. It standardizes the financial system across all our businesses on the financial service side, and it's going to give us greater efficiency. We're now in phase 2 of that project, closing out on phase 2. That's a $2.3 million US spend. So overall, if you convert that to Jamaican dollars, you'll see these two applications alone, 1.4 billion Jamaican dollars. So important to invest in technology to grow the business. Next, I just want to give a little snapshot of what 2023 is looking like so far. So first quarter 2023, the segment results. On the revenue side, you'll see that all 4 of our business segments have recorded increased revenue. And so the main one, again, food trading, bringing in good returns. Overall, revenue is up 7.8% or $2.8 billion. And you see double-digit growth for both banking and or insurance segments, and money services holding their own as well. In terms of the profit before tax, you'll see that our profit before tax has grown. We're now earning over $3 billion in pre-tax profits, and for our first quarter reporting, that's actually the highest first quarter reporting profits we've earned, over $3 billion for 2023 Q1. What you'll see is 2 out of the 4 segments showing growth. The only one that's really showing a major decline is the banking segment. Just to give some context to that one, though, in 2022, there was the IPO transactions I had mentioned, and those would have contributed to some very strong results in the first quarter of last year. This year, as was mentioned by our CEO, the equity market in Jamaica is depressed, and so we're not seeing that those level of returns on the banking side. However, this growth in overall profit, you will see, is really driven by our food business, continuing to do very well overall. So those are the highlights, and we will continue to press forward with that 20% increase in our profitability for Q1. For the rest of the year, we're going to make every effort to continue the momentum from where we are now. And so it's been a good start for 2023. And with that, I'll end my financial highlights. Thank you very much.
Thank you very much, Mr. Webby and Mr. Massaro. Ladies and gentlemen, I think you'll agree that the reports that have been presented have been very substantive, that Don and Andrew have made them as interesting and engaging. Really takes a lot of talent. And join me again in giving both of them another round of applause. Let me also point out that we now have 96 shareholders who are online. 52 non-shareholders are also online. And in person here in the room, we have over 55 persons present. We will take the next 30 minutes or so to answer your questions on the presentations that have been made by Don and Andrew. Let me remind you, Mrs. Solomon has already told you, but let me remind you that questions will be answered in the order in which they have been received. First, we will take those that have been received online prior to the meeting, that is by email prior to the meeting. Second, those from the floor in this room. And finally, if we have time, we will take those that have been received via email since the beginning of the meeting. Online participants can still send in your questions via email to gkinvestor@gkco.com. Please do not submit your questions through the chat. Mr. Webby, our Group CEO, will answer questions with the assistance of Andrew and the other members of his senior management team. Mrs. Solomon, the questions online.
Yes, Chair, I believe that as we have so many shareholders here in person and also the press, I believe they have opted to ask their questions in person. So we can go directly to questions from the floor. So we are asking persons to raise their paddle if they wish to ask a question.
So the key is the paddle, right? So I now open the floor for questions.
We know Mr. Staple has questions, yes?
Mr. Staple.
Mr. Staple.
Mr. Chair. Mr. Chair.
Yes, sir.
We all must give thanks to our God Creator for taking us safely to this whole meeting today. Despite all many challenges, we are gratefully and happy to be glad to know that as a group, we could meet this afternoon face to face to discuss our group's business. We give thanks to our board chairman and his members and the hard-working CEO, Mr. Don Webby, and Mr. Frank James, and employees for significant results that have been achieved in 2022. There was a demonstration of good reporting and shareholders, big and small, were all enlightened and become more aware of what is happening in our company, in Jamaica and abroad. I hope our visitors to Jamaica will enjoy themselves and return with their families at a later date. Mr. Chair.
Yes, sir.
This group of people who are honest, trustworthy, and full of integrity, this has enabled us to be as successful as we are. Mr. Chair, honesty, trustworthy, and integrity goes a far way. And our company is full of that, and we continue to have that at the back of our brain.
Thank you, sir.
Turn me to page 109, Mr. Chair. Mr. Chair, in 2021, our total revenue was $134.9 billion. And that $134.9 billion cost us $125.9 billion, which gave us a net profit of $8.9 billion. For every dollar, Mr. Chair, we made 7 cents profit, while expenses was 93 cents. In 2022, Mr. Chair, we earned a revenue of $147.9 billion. And that $147.9 billion cost us $140.3 billion, which gave us a net profit of $7.6 billion, a reduction in profit. For every dollar, Mr. Chair, of revenue earned, it cost us 95 cents, and we made a profit of 5 cents. What is interesting, Mr. Chair, incrementally, that is 22 over 21, we earned $12.9 billion, and that $12.9 billion cost us $14.3 billion, which gave us a reduction in profit of $1.3 billion incrementally. For every dollar incrementally that we earn, Mr. Chair, it costs us $1.10. What are we doing about this?
Thank you, Mr. Staple. Don, you want to take that?
Thank you. Sorry, thank you very much, Mr. Staple. And this is a point that that you have been raising for some time now. And basically, what if I interpreted your comment or your question, is how can the GraceKennedy Group become more efficient, so more of our revenue will flow to the bottom line. And this is something that we are taking very, very seriously. And in fact, it is a KPI, a key performance indicator at the group level in terms of improving our efficiency. So let us look behind some of the numbers, Mr. Staple. So we have our revenue line, which, as you can see, has been growing nicely. But a lot of the revenue, or some of the revenue, is not flowing through to the bottom line in an efficient way. So the first thing that we have to do in terms of more to the bottom line is to look at our margins, margin management. How can we improve the gross margin that we earn, not only from our food division, but from our financial services division? Because when you speak about the bank, we also speak about the net interest margin. So one of the first items that we did for 2023, and you see it's flowing through better, is to look at the service level and the supply chain. And in fact, our head of domestic foods, Frank James and Zach, they're just coming back from Thailand, where we are having serious discussions and negotiations with a number of suppliers, Mr. Staple, where we can receive lower prices for our goods. So therefore, our cost of goods sold will be reduced, and that will allow or enhance that 5 cents to speak about to improve. The other thing that we're looking at So we're talking about margin management. So you need to improve your margin management. Not only for, when people speak about margin management, they think about food, but it's more than food. It's the financial services also. Then we need to look at our expenses. Are we spending our expenses in an efficient way that would allow value added to the group so we can get more to the bottom line? And that is an exercise that we go through every Monday morning to see how we can reduce expenses. What I'll say to you is that sometimes when you look at expenses, Mr. Staple, there are two categories that I have in my mind. There are expenses that you can defer, or there are expenses that you can look at and see how you can restructure your business processes to become more efficient. I believe on a sustainable basis, the restructuring of your business processes is the way to go to become more efficient. So for example, SAP for HANA and the Oracle Fusion is going to result in us, in terms of cost per transaction, to be reduced and becoming more efficient. So first of all, continue to grow your revenue, look at your margin management, and look at your expenses on a line-by-line basis to ensure that you're getting the value added to be more efficient to flow to your bottom line. One other very important point, and I said it in my presentation, where I said cash, profit is an opinion, cash is a fact. When you have, and you can see the interest cost, because you're a man, you comb every line item in the P&L. When you have interest rates moving from 2% to 7%, that is going to impact your interest expense in a significant way. So what you have to do also is to manage your working capital, your inventory, and your receivables, so you don't leave a lot of cash on the road. You put it in your bank, so you're not going to be paying the overdraft interest. So those are the main items. When you ask me, Dan, what are you doing? Those are the main items that we are focusing on to ensure that we can improve our efficiency and thereby improve our profitability.
Mr. Chair.
Yes, sir.
My concern is Jamaica is not an industrialized country. And if we continue to import raw material into the production of our goods and services, we are going to be at the bad end of the stick. I remember in the 50s, bauxite companies, the ships were lining out at Alligator Pond. 4 or 5 ships waiting to transport the raw ore out of Jamaica. Today, we are seeing that that has been reduced considerably. So although we talk about production, Mr. Chair, we are fooling ourselves. We are not an industrialized country, we are an agricultural country. We have to make sure that what we produce can be sold, and sold at a reasonable price to make the return on the investment. So we must stop fooling ourselves and saying, okay, we are going to produce. Produce what, Mr. Chair? I am saying that we need to understand that the days of production are over. Our young people are going into their own profession. Who's going into agriculture? I am not going to go into agriculture. I will not. So all the lands that are in St. Elizabeth, for example, and Manchester and Clarendon, remain idle because nobody is going into agriculture. If you're going to agriculture, Mr. Chair, you're not there, it is not your business. It is other people's business. And we need to understand that. Turn me to page 112, Mr. Chair. Turn me to page 112. Lastly.
Mr. Staple, I'd like to comment on what you have just said. Because what Mr. Staple said, it's a very profound, it's a very important point, not only from a GraceKennedy's point of view, and as he said, from a national strategic point of view. Mr. Chairman, Mr. Staple, you look like you're listening to what I'm saying in the Senate, which I'm happy about. I have made a challenge that to all Jamaicans that we need to reduce our food import bill from $1 billion to $500 million by 2030. What gets measured gets done. Let me say this to you, Mr. Staple. I agree with you, and we can go offline and speak about it. 100% about being Jamaica, being agriculture with the arable land that we have. Let me give you a specific example, and I'm going to give you an idea that I have, based on a discussion that I had with Frank James. GraceKennedy, many years ago, we imported pepper in that same hot pepper sauce that I showed you and the jerk sauce from Costa Rica. And we made a decision at GraceKennedy that we are going to support the St. Elizabeth farmers. We are going to put in place the infrastructure in Hounslow to buy all the pepper that they produce, right? And then we are going to process it. That is the value added. Then we're bottling it at Denby, authentic Jamaican, and you see that on the shelves of Walmart, right? I think, Mr. Staple, what we should be thinking about strategically is to have a concept of a mother farm, where we have small farmers supplying, because they don't have the infrastructure, they don't have the capital to produce on a mass basis, but this mother farm can give them technical and financial support to produce in 5-acre plots and sell to the mother farm. I have not lost hope in agriculture in Jamaica, and I believe that is the way to go. I had a discussion this morning with Frank James, right? And we're talking about, Chairman, we're talking about the increase in raw materials and what is happening. And Frank said to me, Don, the raw material for tomato ketchup, tomato paste, has gone up by 30%. And I said, what? He said, Don, gone up by 30%. And then I thought about a TVJ documentary that I saw where tomatoes were being dumped to the pigs. And I said, Indiana said, something not right. Right? So is there a way as a country that we can have a facility? And I'm not saying that GraceKennedy, I say we, whether it's public sector, private sector partnership, where we can buy these tomatoes from these farmers and convert them to tomato paste. So our objective would be taken care of that. We're not importing tomato paste and spending our foreign currency on tomato paste. And I believe that if we do it in an efficient way, we can do it lower than the 30% that Frank is talking about. So that's the sort of thinking, Mr. Staple, why what you said a while ago really, really resonated with me. Really resonated with me. I think you answered so.
Mr. Chair,
Yes,
Mr. Chair,
yes,
how many of us sitting down here today, and how many of us in Jamaica are encouraging our young people to go into agriculture? None. None. Because when they go into agriculture, it is not their business. It is the people who are taking care of what is there. That is their business. And, Mr. Chair, what we have to understand as Jamaicans is that we are getting our children to go into the professional field, not in agriculture.
But it can be both, Mr. Staple, and I think what Don has said and laid out for you is a mechanism by which the opportunities will be there for those who want to go into agriculture. And one of our board members put up her hand. And when a mother says that she's willing to have her sons be involved in that field, and particularly one that is as knowledgeable as this one, then we know that there are going to be opportunities there as well, Mr. Staple. So don't give up yet. Don't give up just yet.
Mr. Chair.
Yes, sir.
I listen and I see her hand going up. But at the same time, the reality is, Mr. Chair, the reality is that I am not going to encourage my children to go into agriculture. I have been brought up on the agriculture farm. My father was an agriculture, a great chicken producer. And, Mr. Chair,
yes, sir,
that has changed considerably over the years. That has changed considerably. Because we are saying to our children, get into our profession. Forget agriculture and get into our profession. Mr. Chair, turn me to page 112. In 2022, there was a negative value of $5.3 billion versus positive value in 2021 of $3.8 billion. What account for this cash equivalent in 2021?
Thank you for that question, Mr. Staples. So in terms of cash flow, one of the things that we did during COVID was to make sure that we had sufficient cash reserves, because as you know, during that period of time, there was a demand for, for us to pay suppliers early, and we wanted to make sure that in case there was an issue where the banks were not able to supply us with borrowing, then we would be able to meet our cash requirements. So we had a buildup of cash during 2021. In 2022, we wanted to make sure that we're using our cash efficiently. We want to make sure we're putting our cash to use. So what you would see is that, from our operating activities, which is actually in note 33, previously would have been bringing in cash, but we would not have been disbursing as much cash to earn additional flows. In 2022, we actually increased our lending to our customers, so that actually used up the cash. But in using up the cash, you're actually earning a better return, because we would earn more from lending it to our customers than for keeping it in a bank account, earning a small rate of return. And then you'd have seen that we'd have invested more in our investments for 2022, where again, we're putting it in high yielding investments. So yes, even though it does show a decline in our cash position, that cash is being put to work in the business. We're investing, as I mentioned, we invested $3.8 billion in new assets to grow the business for the future. So we don't see this as necessarily a negative position, but it's really an investment, use of cash to grow the business for the future.
Mr. Chair, I'm going to sit now.
Yes.
Well, Mr. Chair, I would like to stop.
Yes, sir.
I would like us to stop fooling ourselves and stop talking about production with imported raw material. It's not going to work, Mr. Chair. It's not going to work. If we are an industrialized country, we should be producing raw material, and we are not producing the raw material. We have to be importing raw material for production to take place. And that is having a disaster on us as a country, Mr. Chair. So we must stop fooling ourselves that we are producing, and stop fooling ourselves that we are going to continue in this mode of import raw material and export the finished goods. Stop fooling ourselves.
Thank you, Mr. Staple. And you've heard, Mr. Staple, nonetheless, that Frank James and the food division fully believe that we are going to be very successful manufacturers here in Jamaica. But we are a global company. We manufacture in many other areas as well, Mr. Staple, so we understand the process, and we will remain committed to that. Ladies and gentlemen, the floor is still open for other questions. Mr. Bloomfield. I'm sorry. Yes, sir.
Pleasant good afternoon. Lanzel Bloomfield, shareholder. Mr. Chairman, I have 3 quick questions. Page 208, note
Page
26, 208.
Yes.
Note 26, expenses by nature.
Yes.
There is a 3.548 billion for occupancy costs. Please explain what this line item is about.
Occupancy, yes. It's about four lines from, yes, 5 lines from the bottom. Andrew?
Sure. Okay. Thank you, Mr. Bloomfield. So in relation to what occupancy costs relate to, this is really all the components that go into renting or leasing premises that we have our businesses in, whether it is our office space in Jamaica or overseas, or warehouse space in warehouses that we don't own, such as in the US and UK. And these leasing costs would cover the cost of rental, it would cover the cost of electricity, water, and all other utility type costs. So it's really the full cost, as well as the administration and facilities management for those rented premises. So that's kind of the occupancy type costs that we're talking about.
Thank you very much.
Yes, yes.
Mr. Chairman.
Yes, sir.
In relation to Key Insurance Company, of which is a subsidiary of GraceKennedy, prior to the takeover, shareholders in same used to attend and participate in their AGM. However, we are now witnessing that this company has not been opening its meeting for some time now. As a result, I have sold my shares in this company. I now ask, when will you open this AGM for full participation in this company?
Thank you very much. Thank you very much, Mr. Bloomfield, and I'm very sorry to hear that you have sold your shares in Key. I'm sure you'll understand, coming out of the COVID-19 crisis, most companies held their AGM hybrid or virtual. This year, and I'm the chairman of Key, this year I understand that is going to be a virtual meeting. What I'll say to you, Mr. Bloomfield, that I commit as chairman of Key Insurance Limited that the next meeting we'll have it as a face-to-face meeting. And I apologize, but I ask for your understanding. Coming out of COVID-19, we were very careful in terms of how we conduct our AGM. And in fact, for GraceKennedy, I would say, Chair, this is the first meeting that we where we have this level of attendance. So, Mr. Bloomfield, you have my commitment that for the next AGM, it will be a face-to-face, God's willing, that we don't have any more event like a COVID.
Thank you, and that, sir. My last question. What is being done to appoint a dedicated staff to operate the coin machine at the Pavilion Western Union outlet instead of using the security guards, some of which will find every God Almighty excuse about the machine not working, it's not taking $1 coins, etc., etc.?
That, sorry, that is a brilliant question. and I tell you why. It's not only the coin machine, but we have been receiving, and it's no secret, Mr. Chairman, from security companies because of increase in the minimum wage and the contractual arrangement, 42% increase in the security cost. Some of them as high as 70% increase in the security cost. And I said to my team that there's no way that GraceKennedy can afford to pay that. So we're going to have to find a way, using technology, etc., to try and become, as Mr. Staples said, more efficient in terms of security costs. But I can't afford a 42% increase in security costs or 70%. That ain't going to spin for us. All right, Margaret Campbell, that coin machine and Pavilion. I never heard that comment before, that the security operating the machine. Margaret, you want to address that? Margaret is the country manager, COO for GKMS, and she's a coin machine lady.
Mic is coming. Afternoon. Afternoon, everyone. Very happy that our coin exchange has made it to the AGM. Yeah. We're currently sourcing somebody to do that chair, so the security guard will not be doing it forever. So we'll soon find a staff to do that.
I appreciate the response, but I have some bitter experiences. Very bitter. I have not said to the personnel there that I'm a shareholder in the company, and I shouldn't have to say that. I have taken coins there on numerous occasions and feel really shafted.
All right.
There was a young man who was a member of staff, who was very efficient, and he was not there for any long period of time, and then it went back to the security operating the system. And one of the things that I had to do to sort of get not just the machine working in sync with them is to wash the coins before I actually take them so that it runs through the system smoothly. It doesn't detect any dust because the laser system in it to be able to read the coins. So that is one of the systems. And in spite of doing all of that, even the brown money, the ones that the BOJ says we are to take to it, the man changed a lady's amount in a container. And when I took my little widow's mite, he said, the machine not taking it.
Right,
I was treated like that on several occasions. I took other coins, I took $1, a mixture of coins, 120, 10s, and they will find, not just to me, I have stood there in a line, and several other people. One lady came all the way from somewhere in Morant Bay to change coin there because she said the machine there broke down. So I don't know who is servicing these machines on a regular basis, but security guards can't, security is for security. You should have people who are trained, who are knowledgeable about operating the machines and to assist the public, right? I had to beg a gentleman one Saturday up at the Pavilion Mall. Do, sir, please, help me.
Okay.
All right, so Chair, Margaret, the pavilion is operated by Dwight, right? And Grace. I wanted to share with Dwight, as soon as this meeting is over, the comments from Mr. Bloomfield, because obviously he's very passionate about the coin machine and the operations, but I want to go further than that. I want you and Grace and Mr. and Dwight to commit that we're going to find a replacement by June 30th, at the very latest, to replace Mr. Bloomfield's security guard. So we need to commit to it.
We will.
So June 30th, please.
We will.
All right. Thanks, Mr. Bloomfield. I've heard you loud and clear.
Thank you very much, Mr. Chairman.
Good afternoon, everybody. Waiting for the murmur to pull off.
Ladies and gentlemen, Mr. Rose has the floor.
Good afternoon to the board members, fellow shareholders, and persons joining from international and abroad. Mr. Chairman Shirley, could I please get 5 questions in versus normal 3? I'm sure Mr. Webber would appreciate them.
What I'd ask you to do is maybe go through all of them so we can queue them up quickly, Mr. Rose.
Okay, no problem. So the first question, with respect to, GK's plans to, list its list its food and financial businesses on international markets, it is a strategy to actually unlock, So with respect to listing the food and financial subsidiaries on international markets, is a way to unlock further value for GK, considering the potential conglomerate discount that exists in GK. And, to complement on that question as well, I recall, GK was supposed to, reorganize its financial subsidiaries as per the Banking Services Act with respect to the BOJ. So that's kind of question with respect to the international listing and, the reorganization of the financial subsidiary.
That's one.
That's one.
Go ahead.
The second question, is about the M&A plans. So you spoke to, the key M&A leader here, but, with respect to M&A going forward, because I realize whereby, GK's earnings, from Jamaica is going by leaps and bounds, which I'm glad to see. But, with respect to other markets, the pace has somewhat slowed down. So, with respect to the M&A plans, like what potential targets are you looking at, like a potential number, for example?
Okay, go ahead.
Third question, CBDC. GK, has the GK1 app, but with respect to CBDC and First Global, where are you guys on that project? And earlier you spoke about, not taking those increased security costs. So, like, what does that mean, for the impact, to the bank and other financial subsidiaries which, have high cash handling costs?
Thanks. Can I go to you?
Yes,
and
yes.
So a couple of things, David, and you always ask very good questions.
You'll get two, more.
Sorry, I want to make this point very clear before I answer your question. There's going to be no compromise by GraceKennedy on security for our staff and our customers, and by wider thing, our stakeholders. No compromise. All I'm saying, David, is that because of this significant increase, we need to think outside of the box to find a more efficient way to provide the same level of security to our staff and our customers and the wider stakeholders. And we have done a lot of work with, I can say it, with Mark Shields, quite a big document, and it is very clear that if we use technology, camera and surveillance system, there can be a potential to cut costs significantly. So I just want to make that very clear. To answer your question, so we have been having discussions with investment bankers, primarily in New York, and this, as you refer to it, the splitting of the company. There's no question, based on the discussions with all, that a food company listed even on a local exchange and or an overseas exchange is going to add significant value and market capitalization to the GraceKennedy group of companies. That's consensus. What I found very interesting, David speaking to the investment bankers also, is that they are saying to us that, listen, ethnic food is a big thing now, and investors will find that very, very attractive. And in fact, they referred to our Hispanic brand, La Fe, in the USA, as a big plus as having as part of our portfolio. So yes, one of the reasons, or the strategic thinking behind splitting the company is that it is going to be a more simplified company, and it's going to add a lot of value to the shareholders. And that is the consensus by all of the top investment bankers coming out of New York. And I don't think we need it for them to say it to us, but it's a confirmation of what you and I have already discussed. In terms of GKFG and the new Banking Act, we've been having advanced discussions with the central bank. They just wrote to me, which will respond. Nothing material, but that will be done very, very shortly. In terms of the M&A plans, we appointed investment bankers, a company by the name of Broadspan, very, very clear in their methodology of how we're going to go and acquire. One of the things you don't buy for buying is it's a process with significant amount of due diligence and research on it. They submitted actually 50 potential acquisition targets. They narrowed it down to 20. They divided it into tier. Tier 1 meaning that, yes, the people are willing to talk to you, which is about 4 or 5, tier 2, tier 3. So we are going through a process in terms of acquisitions. We are also speaking to Pricewaterhouse for the Caribbean as our investment banker, Wilfred Bagaloo, who is quite knowledgeable about the Caribbean. And for the UK, we're speaking to a company called Piper & Sanders. So we have investment bankers that will advise us on M&A by identifying these targets, helping us with the due diligence process, and contacting the potential candidates and or acquisition targets, and then we'll take it from there. But let me say this, is that we're going to be very careful, we're going to be very prudent, we're going to do significant due diligence, we're going to look behind every nook and cranny in every company before we try and buy it, because we have to make sure that it is a right fit for the GraceKennedy group of companies, and it's going to be accretive. You know what I found to be the biggest challenge, David, over the years in terms of acquisitions? It's not the financial pulling together, you know, it's the culture. And one of the things when you acquire a company, you have to ensure that they have the same risk appetite and the same underlying culture of GraceKennedy, or it's going to become so much more difficult for us to fit, despite the good products that they have. So, yeah, man, there's a process. Investment bankers have been appointed, and we're going through the process. In terms of the CBDC, Grace Burnett, you're there. Grace, you want to, we met with Richard Biles a week or so ago.
Yes, first, it's something we have on the agenda, David, but we do have some other priorities that we have to get done first. Some of the work that you'd have seen on GK1, and we are planning to take it to Trinidad and Guyana as well. So it's on the agenda, but we're just timing it appropriately.
Thanks. Can I get two more questions, Mr. Webby? Or should I say
Mr.
Chairman?
Yes. Your other two questions, go with them quickly, David.
I'm sure you're enjoying this so far, Mr. Shirley.
Sure, David.
You know, there was a significant flip, you know, within the last couple of years in terms of, you know, the contribution between money services and, you know, food trading. So in 2018, food trading only made up 23.12% of PBT, you know, versus money services, which made up 43.76%. And, you know, in 2022, we saw 54.51% contribution by food trading and 31.7%, you know, with respect to money services. I saw whereby, you know, I know you mentioned, you know, the Unicommer and, you know, the NCB deals. So I understand the Unicommer deal, but, you know, in terms of the Western Union, in terms of the NCBFG deal and also digitization. So the first part of it is, with respect to the NCBFG deal, if approved, is it that GraceKennedy will be getting a significant portion of fees, you know, for the Western Union transactions? And then, you know, the second question, you know, is with respect to education and getting persons to GK1, because you mentioned earlier, 93% cash, 7% digital. And, you know, it just kind of hit my mind when I was listening earlier about, wait, you have GK1, but would GK1 actually be able to use contactless payment using your phone? Because that's where we're all going. So that's the first question for you, Mr. Webby.
Thanks a lot, Dee. You didn't ask the question, but let me say it, because I know other shareholders are going to be interested in that, what you refer to as the flip between food and financial services. What is happening is that we acquired a company in 2013, which was a bigger vision for the GraceKennedy Group in the United States of America. And we refer to it affectionately as LLC. That company took us, despite the detailed due diligence, a little longer to turn around than we had anticipated. What I can say to you, and Andreka is here, and Derek is probably listening, and Prof. Shirley, everybody's a part of it. It's a real team effort. That company now is very, very profitable. So what you find is that a loss-making company is now very profitable.
Congrats.
In the food business, and the revenue line is growing. So when you go to Walmart and Publix and Stride Right, as I said to my colleagues, they're going to tell to see my face. You can't get me out of the place. I mean, it's very prominent there, and it's very profitable there. So you find a loss-making company is now profitable. On the flip side now, our money services business in financial services, as you can see from the segment report, is making less profits. So if you do the calculation of mathematics, you're going to understand why that ratio is moving in that direction. And that's the primary reason why you're seeing that. All right, the other question was, just ask the question.
No, so it was with respect to, you know, this was our fourth question with respect to, you know, the Western Union, the GK NCB FG deal with Link.
Yes. Okay, all right, thank you. Thank you for that. So obviously I can't say much because we have an agreement signed with NCB and Link, which is very confidential for competitive reasons.
NDA?
But what I can say to you is that, and my good friend Patrick Hilton would probably be smiling when I said that, but we're happy with the agreement and we're happy with the revenue flows that we will get and the commission.
you're both born the same year, so.
Yeah.
And then the final question is with respect to insurance. I'm not sure if Grace should take this or you're going to take this.
Go ahead.
So, I remember earlier you speaking about, significantly being able to retain reinsurance capacity, which is being supported by, the growth in the Caribbean and your portfolios. But, we've seen a spike in insurance premiums, property, and, right now I'm hearing there's potential increase in motor vehicle premiums.
Yes.
So, hopefully there's no hurricane later this year or anything else to disrupt, some of these plans, but with respect to insurance.
Yeah.
With the potential risk, of there not being any additional reinsurance capacity later this year, like how would this impact the growth of, like GK General and Key locally? Because I see GK's focus is going heavily on the insurance side in the regional expansion.
Yeah, well, our regional expansion, well, it's both really, and there's no secret, I think it was made public that I have actually applied for, or will be applying for a general insurance license in Guyana. Oh. And I've been in touch with the authorities over there. Stephen Whittingham, who is here with us, is in charge of insurance for the GraceKennedy group of companies. He's the deputy CEO of Financial Services, and they have been doing a really good job in terms of negotiating. I have a great track record at GraceKennedy in terms of reinsurance capacity. But Stephen, you want to comment on David's
point
about the capacity?
Sure, David. So on the motor insurance side, the increases that you're hearing about in terms of premiums really driven by inflation. Remember, we import parts to repair vehicles. Inflation in the countries, Mr. Webby showed the chart, 6, 7, 8% in those markets, so that's what's driving that. On the property side, you are correct. We have been facing higher reinsurance costs across the entire region, and it's something that's not just affecting our region, but globally. GraceKennedy, we did our renewal for our reinsurance already for the year, so we have our program set for the entire year. And as Mr. Webby said, we have a long track record of an extensive relationship with reinsurance partners globally. Well diversified, and we believe that we're in a really strong position to continue to ensure that despite what happens with capacity to the overall markets, that we are able to continue to secure the capacity we need to continue to grow our portfolio in Jamaica and across the region.
Thank you, Stephen. Thank you, sir. Chair. Thank you, Chair Shirley.
Mr. Whittingham, it sounds strange when you come from Mr. Webby. But I can tell you, I've discussed with Grace and Stephen, and what we have negotiated with our reinsurers, and we only use A+ reinsurers. GraceKennedy is as a group, is in a competitive advantage. Let's put it that way in terms of our capacity that we have negotiated.
Thanks again, Sir Webby. Thanks again, Mr. Masada. Thanks, Gail Miss Solomon. Thank you to Grace Burnett.
Thank you very much, Mr. Rose. Ladies and gentlemen,
Mr. Ellis.
Mr. Ellington, we have to take your question, but I would have to say that at this stage we're actually running a bit behind our schedule. So I'm going to make your question the last one. And remember all of those people that David... Okay. Okay, we'll take a couple of questions again, but I'm encouraging you to remember that the executives are all here. And so the period immediately after, you have the opportunity to get it directly from the horse's mouth, so to speak. But we will just take a couple more.
Okay,
Mr. Williams, you have to read even faster now.
Since you're finishing now, maybe I could ask a couple of questions and help you to finish.
Sure.
Actually, I'm pretty much at one. But here's a point, Chairman. We have listed in the annual report here the company's commitment to ESG. As I understand it, ESG is a bit of a controversy in manufacturing and financial circles these days. I mean, are we thinking that a bank will not lend to a company that might, shall we say, contravene somebody's ESG rules? Are we saying that ESG is a subjective thing that we would decide which are likely to be supported by a company like GK. Consequently, I'd just like you to explain to us, CEO, what your views on ESG then generally are, because obviously it could have significant cost to not only your bottom line, but the whole future of our company. As I understand it, some other companies that have a lot of, or some countries that have a lot of manufacturing and other productive capacity don't think as much of ESG as some people are forcing us to do. I'm sure you've given a lot of thought to it, and you're giving more. Your ideas, please.
I'll ask Gail Solomon to answer your question. My own thoughts based on my experience, early experience, and it's a process and it's relatively new to Jamaica, right? Yeah. And we are going through a very careful exercise by being advised by the experts, right? Because we are learning also as we go along. What I can say to you, I'm sure if you're here from my presentation where I showed the chart, but in discussions, to follow up on what David was asking, in my discussions with investment bankers and other bankers, Mr. Elliston, the third question is about my ESG policy. So you are in fact correct that I can sit down, I'm not saying it's tomorrow or a year's time or whatever, but I can see in the future where when you have a checklist for a credit, right, if you don't have a proper ESG policy, then the bank may put you at a disadvantage in terms of getting the loan, or they may put it as a higher risk. When we talk about ESG, there are some simple things, Indiana is not in our head, like child labor, right, and all that kind of thing. We don't want to be associated with that. And that's why some of the manufacturers, you're right, some of the manufacturers in the Far East and other areas are showing some amount of resistance, Mr. Chairman, because what they are doing is not right, right? And I think ESG is trying to bring everybody in line. But it's going to be a process. It's a learning process for GraceKennedy, and we are being advised by the experts as we move along. So we might not move from in 11 seconds from 0 to 100 with Mr. Williams' Porsche, but we might move to 60 before we move to 100. So the point I'm making is a learning process, but you're spot on. This is not going to be a nice to have, something that we have to do. Gabe, I've been speaking a little long. ESG.
Thank you so much, Mr. Ellis. That's really a great question, and I think our group CEO is correct, and one of the things that has benefited GraceKennedy is to be forward-looking, and that's exactly the approach that we have taken with ESG. It's not something that's a regulatory obligation for us now, but we recognize that it will be, and so we are setting ourselves up for that reason to ensure that we are implementing a framework that will allow us to be operating at a global standard, because we have bold aspirations. You saw our 2030 vision, and it's one of the pillars of it. We have this ESG framework to carry us through to that 2030 vision, which includes listing on international stock exchanges. We're going to ensure, when you see our ESG report come out this year, it's going to be governed by SASB standards, which fall under the IFRS umbrella. So we are setting ourselves up so that we can report at that international standard. And I think one of the things that we always have to bear in mind is that ESG covers not just risk, but opportunity. So yes, it's significant obligations, and some of them are costly, Mr. Ellis, that is true, but it's going to be more costly to not do it. Our customers are demanding these obligations from us, and so are our employees. I cannot tell you how much interest this ESG discussion that our group CEO mandated on us 2 years ago after he spoke in the Senate, and it really got a lot of positive feedback. So we're very proud to be pioneering this initiative in the region, and it really is an extension of what GraceKennedy has always done. It is our commitment to being good corporate citizens, to providing responsible products and services, to be stewards of the environment, to provide a respectful and safe workplace, and to promote vibrant and inclusive communities. That is our commitment, and what we're really doing now through this ESG framework is promising our stakeholders that we are going to make commitments that you can hold us accountable for.
Thank you, sir. The only thing I would ask you to, well, add to your consideration is you say there's no regulatory framework for it now.
Locally.
But I hope whenever any is developed, your contribution to it will help to protect other people or other organizations, or certainly the whole atmosphere in which we all operate, rather than simply accepting somebody's idea because they find some benefit in pushing it into shall we say, the metasphere.
Okay, thank you for that, sir. We certainly will.
Mr. Ellison, thank you very much. It's an important question, and the good thing is that your investment is in a company that believes in transparency, openness, and that you're on a journey with us, and we will respect the observations that you make as this thing unfolds. Thank you very much, sir. We have one last question from Al Edwards.
Good afternoon, Chairman. Can you forgive me if I just ask two quick questions? I'll shoot them out.
Can't say no to you, Al. Go ahead.
Okay.
Go ahead, sir.
First question. Are you at all worried about the new IFRS requirements? You did very well in the first quarter of this year, but looking ahead, how worried are you with that? And the second question, I ask it tongue-in-cheek, how heartened are you by the performance of manufacturers? If you look at earnings, you see Wysinco, Sepro, GraceKennedy doing very well. How heartened are you by that? Tongue firmly in cheek.
Okay, well, thanks a lot. And I know you're good at that. Andrew, I think you're speaking all about, because it's been in the news a lot, IFRS 17. Yeah, Andrew?
Thanks for that question. So, GraceKennedy, our insurance business is primarily in the general insurance, which is kind of more on the short term in nature. So most of our property and motor contracts are 12 months. And so those contracts under the insurance standard are not as significantly affected as companies that are in the life insurance business, kind of long term, that offer whole life and other investment linked long term insurance products. So as you said, yes, we did report on the IFRS 17 in the first quarter, and that all that historical impact has already been recorded. Going forward, we don't anticipate that there'll be a significant variation in our profit reporting compared to what it was under IFRS 4, which is the old standard. So I would say there's less volatility going forward when you compare it to other insurance companies that are in longer term type products.
So Al, as I said in my presentation, and you and I have discussed it, I really believe that manufacturing, and maybe I should say not only for GraceKennedy, can be a competitive advantage. And as you correctly said, a number of the manufacturers are showing increase in profitability. As you saw in the numbers that I shared with you, we have invested $2.5 billion over 5 years. So that's to show you our commitment that we believe that manufacturing is going to be a competitive advantage. What I'm very excited about, Al, is the wider market. And when I say the wider market, is that the export market. I believe manufacturers in Jamaica, if we have quality products, well priced and well marketed, it can really go through it and grow in the world market. And this is not only for GraceKennedy. And so that is why we have set ourselves a target to increase our export from 30 to 50%. And our revenue from manufacturing has actually been growing. One of the things that I'd say to you for GraceKennedy as a distribution company, a lot of people don't know this, but let me say this to our shareholders publicly. A lot of people don't know that we actually distribute for Wysinco in the UK. That makes sense. We actually distribute for Wysinco in the UK. So GraceKennedy, while we have our distribution, strong distribution, which has taken us many years to build, in the USA, Canada, and the UK. We're actually supporting other manufacturers in Jamaica. So we distribute for Wisynco in the UK, and they're doing very well with their brand there. Andrew Coyle will tell you. So I believe in manufacturing. Mr. Staple raised a good point about the raw materials, if we need to use more from Jamaica to make it more authentic. But you're going to see us continue to invest in manufacturing, and you're going to see us continue to introduce new products using our manufacturing plants. I should also mention, Chairman, that we also have a manufacturing plant in Corwin in the United Kingdom, where we manufacture our pepper sauce. It's called Encona. Really, really good pepper sauce. And the pepper mash is actually produced from our farmers in St. Elizabeth. It goes to Hounslow, and we export that pepper mash to the United Kingdom to put in our Encona sauce, which is sold all over Europe and in the UK.
Thank you very much, Don, for those answers. And thank you very much, ladies and gentlemen. I think, even though we have gone over a little bit, I think you'll agree that we had an interesting set of interchanges between members of the audience, our shareholders, and our executives. This brings us to the auditor's report. The auditor's report, the director's report, and the audited group accounts have been circulated to the shareholders. And I will now invite Mr. Paul Williams of PricewaterhouseCoopers to read the auditor's report. Paul?
Thanks very much, Chair. Good afternoon. Independence Auditor's Report to the members of GraceKennedy Limited.
Colleagues, I'll ask you to give Mr. Williams your attention, please. Thank you very much.
Thank you. Thanks again, Chair. Report on the audit of the consolidated and standalone financial statement. Our opinion. In our opinion, the consolidated financial statement and the standalone financial statement give a true and fair view of the consolidated financial position of GraceKennedy Limited, the company, and its subsidiary, together the group, and the standalone financial position of the company as of 31st December 2022, and of their consolidated and standalone financial performance and their consolidated and standalone cash flow for the year then ended in accordance with International Financial Reporting Standard, IFRS, and with the requirement of the Jamaican Companies Act. What we have audited. The group consolidated and standalone financial statement comprise the consolidated statement of financial position as of 31st December 2022, the consolidated income statement for the year then ended, the consolidated statement of comprehensive income for the year then ended, the consolidated statement of changes in equity for the year then ended, the consolidated statement of cash flow for the year then ended, the company statement of financial position as of 31st December 2022, the company income statement for the year then ended, the company statement of comprehensive income for the year then ended, the company statement of changes in equity for the year then ended, the company statement of cash flow for the year then ended, and the notes to the financial statement, which include significant accounting policies and other explanatory information. Basis for opinion. We have conducted our audit in accordance with International Standard on Auditing, ICAs. Our responsibilities under those standards are further described in the auditor's responsibility for the audit of the consolidated and standalone financial statement section of our report. We believe the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Independence. We are independent of the group in accordance with International Code of Ethics for Professional Accountants, including international independent standards issued by the International Ethics Standard Board for Accountants, the IESBA code. We have fulfilled our other ethical responsibilities in accordance with the said code. Our audit approach. Audit scope. As part of designing our audit, we determine materiality and assess the risk of material misstatement in a consolidated and standalone financial statement. In particular, we consider where management made subjective judgment, for example, in respect of significant accounting estimates that involve making assumptions and considering future events that are inherently uncertain. As in all our audit, we also address the risks of management override of internal controls, including, among other matters, consideration whether there was evidence of bias that represented a risk of material misstatement due to fraud. Or we tailor our audit scope. We tailor the scope of our audit in order to perform sufficient work to enable us to provide an opinion on a consolidated financial statement as a whole, taking into account the structure of the group, the accounting processes and control, and the industries in which the group operates. In assessing the risks of material misstatement of the group consolidated financial statement, and to ensure that we had adequate quantitative coverage of significant accounts in a consolidated financial statement, we design and perform audit procedure over various components. The group comprised 47 reporting components, of which we selected 25 components, which represent the principal business unit within which the group operates and covers entities within Jamaica, Barbados, Anguilla, Trinidad and Tobago, Eastern Caribbean countries, Canada, the United Kingdom, the United States of America, and Guyana. Of the 25 components selected, we perform an audit of the complete financial information of 14 components, which were selected based on their size, risk characteristics, or both. For the remaining 11 components, we perform audit procedures on specific account or for specific procedures within that component that we consider had potential for the greatest impact on the significant accounts in the consolidated financial statement, either due to size of these accounts or their risk profile. The audit work performed covered 97% of the group's total revenue and 93% of total assets. In relation to the remaining component, we perform other procedures, including analytical review procedures, testing of consolidated journal, and intercompany eliminations, and foreign currency translation, recalculation, to respond to any potential risks of material misstatement to the group consolidated financial statement. For components that are in scope of the group audit, we use component auditors from PwC network firms and non-PwC firms who are familiar with the local laws and regulations to perform this audit work. Throughout the audit, we had regular meetings and correspondence with management and component auditors to follow up on progress of work for all components. The group engagement team review working papers relating to the audit approach and findings of the component auditors. Key audit matters. Key audit matters are those matters that, in our professional judgment, were of most significant in our audit of the consolidated and standalone financial statement of the current period. These matters were addressed in the context of our audit of the consolidated and standalone financial statement as a whole. And in forming our opinion thereon, we do not provide a separate opinion on these matters. The first key audit matter, valuation of incurred but not reported IBNR claims for general insurance contracts, which is at the group level. Refer to notes 2R, 41V, and 17 of the financial statement for disclosure of related accounting policies, estimates, and balances. As of 31st December 2022, total insurance reserves amounted to $11.93 billion, which include IBNR reserve of $1.11 billion, or 0.089% of total liabilities of the group. The methodologies and assumptions utilized to develop IBNR reserves involve significant degree of judgment. There is generally less information available in relation to these claims, which can result in variability between the initial estimate and the final settlement. A range of methods may be used to determine these provisions. Management uses qualified external actuaries to assist in determining the valuation of IBNR claims. We focus on this area because there are a number of explicit and implicit assumptions relating to the expected settlement amount and settlement pattern of claims underlying these methods, and the value determined are subject to complex calculation. How our audit process address this key audit matter. Our approach to addressing this matter with the assistance of our actuarial expert involving the following procedures, among others. We test the completeness, accuracy, and reliability of the underlying data utilized by management and their external actuarial expert to support actuarial valuation. We also perform a method and assumption analysis of the actuarial valuation prepared by the group actuaries. We also evaluated the assumption used by management and assessed the methodology used for appropriateness and consistency with established actuarial practice and methodology used in prior year. The results of our procedures indicate that management's valuation of the IBNR claims for a general insurance contract was not unreasonable. The second key audit matter, IFRS 9, financial instruments, the probabilities of default, forward-looking information, and significant increase in credit risk at the group level. Refer to notes 2H, 3C, 1, 4, 6, and 9 of the financial statement for disclosure on related accounting policies and estimates and balances. As of 31st December 2022, the group's loans and advances totaled $36.8 billion. The group investment security at amortized cost and fair value through other comprehensive income totaled $45.3 billion. In aggregate, the above exposure represents 41% of total assets at the reporting date. The resultant impairment recorded under the expected credit loss impairment model amounted to $1.7 billion for loans and advances and $353.6 million for debt securities. In assessing impairment, IFRS 9 prescribes a forward-looking ECL impairment model, which takes into account reasonable and supportable forward-looking information, as well as probability of default, the PD. The PD represents the likelihood of a borrower defaulting on their obligation over the next 12 months, or over the remaining lifetime of the obligation. The 12 months and lifetime PDs are determined differently for loans and advances and investment. For loans and advances, management developed PDs based on the group's specific historical default rate for each industry classification. In performing historical analysis, management identified economic variables impacting credit risk and the ECL for each portfolio. For investment securities, which include debt securities comprising sovereign and corporate securities, PDs are developed by reference to external data collated by Standard & Poor's with adjustment for industry and country-specific risks where appropriate. The estimation and application of forward-looking information requires significant judgment. Stage 1 and Stage 2 credit loss allowances are modeled based on macro variables or changes in macro variables which mostly correlate with the credit loss in the relevant portfolio. Each macro scenario used in the ECL calculation incorporates forecasts of the relevant macro variables. In the event of significant increase in credit risk, the SICR, an allowance or provision is required for the ECL, resulting from all possible default events over the expected life of the financial instrument, which is a lifetime ECL. The consideration for days past due, as well as adverse changing in a borrower's credit rating, industry, or the economic environment are factors considered in determining whether there has been a significant increase in credit risk. The estimation of the ECL in Stage 1 and Stage 2 is a discounted, probability-weighted estimate that considers a minimum of 3 future economic scenarios. The base case scenario is based on a macro forecast which are publicly available. Upside and downside scenarios are set relative to the base case scenarios based on reasonable possible alternative macroeconomic conditions. We focus on this area due to the complexity of the techniques used to determine the PDs and identify significant increase in credit risk, and the number of significant judgments made by management regarding possible future economic scenarios as it pertains to debt security and loan and advances. How we audit address these key audit matters. Our approach to addressing this matter with the assistance of our valuation specialists involved the following procedures, among others. We update our understanding of management ECL model, including any changes to source data and assumption. We also tested the completeness of all loans and advances and debt securities to determine whether all items were included in the ECL model by agreeing the model to detail loan and securities listing. We also evaluated the reasonableness of management judgment pertaining to the PD, the significant increase in credit risk, and the forward-looking information, including macro factors impacting the weighting of the scenarios as follows. For loan and advances for the PD, we tested critical data fields using the ECL model for the PD determination, such as default date, effective interest rate, write-off of data, and loan type by tracing data back to source documents. We also reperformed the calculation of days past due, a key data input into the PD parameter in the group banking system on a sample basis. With respect to the significant increase in credit risk, we evaluate staging of loan and advances and compare our results to those identified and classified by management. With respect to the debt securities, for the PDs for debt securities, we tested the critical data fields used in the ECL model, such as the maturity date, amortized costs, accrued interest, credit rating, and interest rate by tracing back to the relevant source document. We also agree credit rating and historical default rate used to calculate the PDs on a sample basis to external source, such as external rating agency. For the significant increase in credit risk for the debt security, we tested on a sample basis the accuracy of the initial credit risk, the credit risk at the reporting date used by the rating agency definition of investment grade, and evaluated the appropriateness of the group classification of debt security as Stage 2. We also perform an independent qualitative assessment for a sample of borrowers to determine if there was any adverse public information affecting the criteria used to perform the staging. We also inspected the financial statement of a sample of the borrowers to determine if there was any significant downturn in financial performance. This aided in assessing the staging of borrowers. For forward-looking information, both for loan and advances and debt securities, we assessed the reasonableness of the group's methodology for determining economic scenarios, including the appropriateness of gross domestic product and unemployment rate economic factors utilized by management. We also evaluated the reasonableness of the increase in the weighting used for the worst-case scenario by agreeing the forward-looking economic information to external sources published by pronounced reputable third parties. We also sensitized the probability weighting used in the ECL model. The result of our procedure indicated that the assumption used by management for determining the probability of default, the significant increase in credit risk, and forward-looking information were not unreasonable. The third key audit matter, goodwill impairment for the United States of America operations. This is at a group level. Refer to notes 2G, 4.1, and 11 to the financial statement for disclosure of related accounting policies, estimates, and balances. The total carrying value of goodwill as at the 31st of December 2022 is $1.9 billion, of which $1.13 billion relates to the U.S. operations. In accordance with IS 36, impairment of assets, management perform an annual goodwill impairment assessment to determine whether the carrying value exceeded the recoverable amount of the cash generating unit, the CGU, to which the goodwill is allocated and is therefore impaired at the reporting date. Goodwill relating to the recoverable amount of a CGU is calculated as the higher of the value in use and fair value less cost of disposal. Management determined the recoverable amount by reference to value in use, which is based on discounted cash flow projection, over which management makes significant judgments on key inputs. As a result of the assessment, management determined there were no impairment as of 31st December 2022. We focus on this area as the goodwill impairment assessment requires significant judgment and estimation and is sensitive to changes in key assumptions. The key assumptions were assessed by management as being the revenue growth rate, the discount rate, earnings before interest, taxes, depreciation, amortization, EBITDA to revenue, and capital expenditure to revenue. Our audit addressed this key audit matter by our approach in addressing this key audit matter involved the following procedures, among others. We update our understanding of management approach to performing annual impairment assessment. This includes the process by which management's key assumptions and methodologies were developed and assessing their appropriateness. We also compare previous forecasts to actual results in order to assess the performance of the business and the extent to which reliance could be placed on management's ability to forecast. We tested key assumptions as follows. We evaluated the revenue growth rate and the discount rate against valuation of similar companies. We also evaluated the EBITDA and the capital expenditure to revenue growth assumptions against internal and relevant external derived data where available. We also tested the calculation for mathematical accuracy and assessed the sensitivity of the calculation by varying the key assumptions and adjustment within management cash flow forecasts. The results of our procedure indicate management's determination that goodwill was not impaired at the reporting date was not unreasonable. The fourth and final key audit matter relates to valuation of the defined benefit pension scheme and other post-employment obligation, both at the group and the company level. Refer to note 2M, 43, and 14 to the financial statement disclosure for relating accounting policies, estimates, and balances. The group has a defined benefit scheme and other post-employment obligation which are significant in the context of the overall statement of financial position of the group and the company. Pension scheme obligation total $20.5 billion for the group and the company as at the 31st of December 2022. The pension scheme obligation are included as a part of the net pension assets of $1.8 billion on the respective statement of financial position. Other post-employment obligation amounted to $4.3 billion and $2.1 billion for the group and the company, respectively. We focus on this area as the valuation of the defined benefit liabilities and other post-employment obligations require significant levels of judgment and technical expertise in determining appropriate assumption. A number of key assumptions can have a material impact on the calculation of the liability and obligations, including salary increases, inflation rates, pension increases, discount rate, and mortality rates. Management uses external actuaries to assess in determining these assumptions and in valuing the defined benefit scheme and other post-employment obligations. Our audit procedure to address the key audit matter with the assistance of our own actuarial expert involves the following procedures, among others. We evaluated management assumption made in in relation to the violation of the defined benefit scheme and other post-employment obligation, and the assumption relating to salary increases, pension increases, mortality rate by comparing to the national and industrial statistical average. We also agreed to discount on the inflation rate using the valuation of the pension scheme and other post-employment obligation to those issued by the Institute of Chartered Accountants of Jamaica and targets set by the Bank of Jamaica as well. We also performed inquiries with management and management external actuary and evaluated the key economic assumption used in the calculation of the liability. We also tested the completeness and the accuracy of data extracted, supplied to the group actuaries, which is used in the actual calculation. The result of our procedure indicated management valuation of the defined pension scheme and other post-employment benefit was not unreasonable. Other information. Management is responsible for the other information. Other information comprises the annual report, but does not include the consolidated and standalone financial statement and our audit thereon, which is expected to be made available to us after the date of our audit report. Our opinion on the consolidated and standalone financial statement does not cover other information, and we will not express any form of assurance conclusion thereon. In connection with our audit of the consolidated and standalone financial statement, our responsibility is to read the other information identified above when it becomes available, and in doing so, consider whether the other information is materially inconsistent with the consolidated and standalone financial statement, or our knowledge obtained in the audit, or otherwise appear to be materially misstated. When we read the annual report, if we concluded that there is a material misstatement therein, we are required to communicate the matter to those charged with governance. Responsibilities of management and those charged with governance of the consolidated and standalone financial statement. Management is responsible for the preparation of the consolidated and standalone financial statement that give a true and fair view in accordance with IFRS and with the requirement of the Jamaican Companies Act, and for such internal control as the management determined necessary to enable the preparation of consolidated and standalone financial statements that are free from material misstatement, whether due to fraud or error. In preparing the consolidated and standalone financial statement, management is responsible for assessing the group and the company's ability to continue as a going concern, disclosing as applicable matters relating to going concern, and using the going concern basis of accounting unless management either intend to liquidate the group or the company or to cease operation, or has no realistic alternative but to do so. Those charged with governance are responsible for overseeing the group and the company's financial reporting process. Auditor's responsibility for the audit of the consolidated and standalone financial statement. Our objectives are to obtain reasonable assurance about whether the consolidated and standalone financial statement as a whole are free from material misstatement, whether due to fraud or error, and to issue an audit report that includes our opinion. Reasonable assurance is a high level of assurance, but is not a guarantee that an audit conducted in accordance with ISA will always detect a material misstatement when it exists. Misstatement can arise from fraud or error and are considered material if, individually or in aggregate, they could reasonably be expected to influence the economic decision of the users taken on the basis of these consolidated and standalone financial statements. As part of an audit in accordance with ISA, we exercise professional judgment and maintain professional skepticism throughout the audit. We also identify and assess the risks of material misstatement of the consolidated and standalone financial statement, whether due to fraud or error, design and perform audit procedures responsive to those risks, and obtain audit evidence that is sufficient and appropriate to provide a basis for our opinion. The risk of not detecting a material misstatement resulting from fraud is higher than one resulting from error, as fraud may involve collusion, forgery, intentional omission, misrepresentation, or the override of internal controls. We also obtain an understanding of internal control relevant to the audit in order to design procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the group and company internal control. We also evaluate the appropriateness of accounting policies used and the reasonableness of accounting estimates and related disclosures made by management. We conclude on the appropriateness of management use of the going concern basis of accounting, and based on the audit evidence obtained, whether a material uncertainty exists related to event or condition that may cast doubt on the group and the company's ability to continue as a going concern. If we conclude that a material uncertainty exists, we are required to draw attention in our audit report to the related disclosures in the consolidated and standalone financial statement, or if such disclosures are inadequate, to modify our opinion. Our conclusions are based on the audit evidence obtained to date of our audit report. However, future events or conditions may cause the group or the company to cease as a going concern. We evaluate the overall presentation, structure, and content of the consolidation and standalone financial statement, including the disclosures and whether the consolidated and standalone financial statement represent the underlying transaction and events in a manner that achieves fair presentation. We also obtain sufficient appropriate audit evidence regarding the financial information of the entities or business activities within the group to express an opinion on the consolidated financial statement. We are responsible for the direction, supervision, and performance of the group audit. We remain solely responsible for our audit opinion. We communicate to those charged with governance regarding, among other matters, the planned scope and timing of the audit and significant audit findings, including any significant deficiencies in internal control that we identified during our audit. We also provide those charged with governance with a statement that we have complied with all the relevant ethical requirements regarding independence, and to communicate to them all relationship and other matters that may reasonably be thought to bear in our independence, and where applicable, action taken to eliminate threat or safeguard apply. From the matters communicated to those charged with governance, we determined those matters that were of most significance in the audit of the consolidated and standalone financial statement of the current period, and are therefore key audit matters. We describe these matters in our audit report unless laws or regulation precludes public disclosure about the matter, or when in extremely rare circumstances we determine that the matter should not be communicated in our report because of adverse consequences of doing so would reasonably be expected to outweigh the public interest benefit of such communication. Report and other legal and regulatory requirements. As required by the Jamaican Companies Act, we have obtained all information and explanation which, to the best of our knowledge and belief, were necessary for the purpose of our audit. In our opinion, proper accounting records have been kept so far as appear from our examination of those records, and the company consolidated and standalone financial statement are in agreement therewith and give the information required by the Jamaican Companies Act in a manner so required. Engagement partner on the audit resulting in this independent audit report is Paul Williams, signed by PricewaterhouseCoopers Chartered Accountant, March 1, 2023, Kingston, Jamaica. Thank you.
Thank you very much. Thank you very much, Mr. Williams. I think those gathered are suitably impressed by your stamina, sir. May we please, colleagues, we're getting on to the home stretch now. May we please have a motion that the director's report be taken as read. Yes, Mr. Staple and David. So moved. We will now take the vote. Shareholders in the room, those in favor, please raise your paddles. Those against? I see none. Shareholders online, I invite you to cast your vote.
What's easy? FGB Alternative Banking Channels. Banking closer to you with agent banking. Banking on your own time at our VTMs. Secure banking online. Access cash 24/7. Tap and go. Now that's convenient banking. Easy as ABC. First Global Bank, your commercial bank from GraceKennedy.
Spice up your next party with Grace Jerk Chicken Wings in 3 delicious flavors: hot jerk, mild jerk, and honey jerk. Pop them in the oven for 25 minutes and enjoy Grace Jerk Chicken Wings like nothing you've ever tasted before.
Suzanne? Votes are in. Any? 100% again. Thank you. The auditor's report, director's report, and statement of accounts. Will the secretary please table the reports together with the audited group accounts?
So table, Chair.
May we have a motion that the audited group accounts for the year ended March 31st, 2022, and the reports of the directors and auditors circulated with the notice convening the meeting be and are hereby adopted. Indiana.
And Grace Burnett.
And Grace Burnett. Shareholders in the room, those in favor, those against, the ayes have it. Shareholders online, I invite you to cast your vote, and we now await those results.
No matter who you are or where you come from, a great soda is a great soda until you make it better. Grace Island Sodas, Jamaican born, Toronto raised.
I hope all of you who are here with us have tried the island soda. Really good. Yes, Mr. Ellison.
I just wonder whether it was a good chase.
Try it.
Next time. Next time.
It looks like 100% again.
Yes. Yes, Chair.
Approval and ratification. Sorry, I declare the motion having been carried based on the votes.
Thank you, Chair.
The approval and ratification of dividends. We now come to that section of the meeting. May I have a motion that, as recommended by the directors, the interim dividend paid on the 8th of April 2022, the 16th of June 2022, the 23rd of September 2022, and the 15th of December 2022 be and are hereby declared as final, and no further dividend be paid in respect of the year under review.
Moved by Mark Anthony over there, Chair.
Okay. And seconded by David.
Seconded by Mr. Ellis. Could we?
Oh, Mr. Elliston. Yes. Okay. We will now, so moved, we will now take the vote here in the room. Please put up your paddles. Looks like a repeat of the last. Can I see those that say nay? Unanimous here. We now invite those online to cast their vote, and we await their results.
Okay, cash in free to live. Need a good jingle. First I'm seeing it.
Again,
100%.
unanimous.
Yes.
The results are in. I declare the motion as having been carried. The next item of business is the election of our newest director. I'm pleased to introduce Mrs. Vanessa Rizzioli, who was appointed to the board on July 28, 2022. Mrs. Rizzioli is a senior legal counsel at Thames Water Utilities Limited in the United Kingdom. She began her career, as Don told you earlier, at the law firm of Duncox, Orritt and Ashenheim, now known as Duncox. And as he told you, she was a close associate with Chris Bovell, who was a long-standing member of our board for many, many years. Mrs. Rizzioli holds an LLM from the Cambridge University, Queen's College, UK, and an LLB from the University of the West Indies, Cave Hill. She's a member of GraceKennedy's Audit Committee and the Corporate Governance and Nomination Committee. We're delighted to have a member of the diaspora serving on our board. Please note that further details about Mrs. Rizzioli are available on our website and in our 2022 annual report. Under Article 108 of the company's articles, Mrs. Vanessa Rizzioli, having been appointed by the board since our last annual general meeting, will retire from office and, being eligible, offers herself for election. May we please have a motion that Mrs. Vanessa Rizzioli be and is hereby elected as director of the company? Yes, ma'am. June Campbell. Judith Chung. So moved. We now take the vote. Those in favor here in the room? Those against? Yes, sir. Mr. Staple, go ahead.
Mr. Chair.
Yes, sir.
Why is it that you didn't pass a resolution and block? You wouldn't have to go to this on a one-to-one basis.
Chair, I can answer that, Chair. So, Mr. Staple, thank you for that observation. It's very clear that you're paying attention. So, Mrs. Rizzioli was appointed because there was a vacancy on the board. And so there is now the AGM following her appointment. She now offers herself up for re-election. We do have directors who are retiring by rotation, and they will be presented en bloc. But Mrs. Rizzioli is a special case because it is her first time at an AGM, so she's being put up for re-election, pursuant to our articles.
Mr. Ellison?
Actually, that was a point of clarity. But I also think that it's a little bit unreasonable to re-elect people who are retiring. I'm talking about where we have a group, in electing them en bloc. I mean, it eliminates the opportunity for so many other people visiting the meeting to be able to propose a person to be elected and a person to be seconded. In other words, it gives voting for directors individually, gives more members of the meeting opportunity to participate. Is something unreasonable with that? I recognize Mrs. Rizzioli's situation, and I'm happy that we've looked at it that way, that you've explained what it is. But I just like the idea of our voting for our directors individually. I think a lot of us would like to be able to vote and to choose for each. And if you don't mind my saying that, there might be some who don't want to vote for them either.
Thank you very much, Mr. Ellison. And so we have the two sides of the coin. We'd like to be expedient, but at the same time, this is a section of the meeting that allows for participation of our group. So we'll continue as we have it planned. Thank you very much, gentlemen. Mr. Staple, I think you have taken down the only objection that we have had. So we have unanimous vote for Mrs. Rizzioli. Did we take? We haven't taken those on. We should have taken the ones online while we were doing that. The shareholders online, I now invite you to cast your vote on the motion that was earlier passed. Yes, sir.
Since we're not using en bloc, will we eliminate that from the report?
Can I take that, Chair?
Can you eliminate that from the report since we're not using it?
So, Mr. Staple, we're going a little ahead of ourselves, so there will be an opportunity for there to be a vote on the ability for the re-elections to be en bloc or not. So we will take a vote on that. So that is, I believe, the next resolution.
The vote, is the vote completed? It's 100%. I'm delighted to declare the motion carried and welcome Mrs. GraceKennedy. We get to the section that Mr. Staple is interested in, the approval for the re-election of directors retiring by rotation en bloc. The directors retiring from office by rotation pursuant to Articles 102 of the company's Articles of Incorporation are Dr. Paris Loyi Jr., Mr. Andrew Masado, and Mr. Peter Williams, who being eligible, offer themselves for re-election. Dr. Paris Loyi Jr. is the Chief Scientific Officer of Portland Holdings Limited and the Managing Director of PAMAS, which means P&A Management Advisor Services Limited. He's a member of GraceKennedy's Audit Committee, the Corporate Governance and Nomination Committee, and the Compensation Subcommittee. Dr. Loyi specializes in advanced geographic information systems and data analytics. Mr. Andrew Masado is GraceKennedy's Group Financial Officer. He's a finance and accounting professional and a fellow of the Institute of Chartered Accountants of Jamaica. Mr. Masada joined the company in 1999 and has held various positions within the corporate finance and accounting department. Mr. Peter Williams is a retired partner of PricewaterhouseCoopers Jamaica Assurance Practice and has 4 decades of experience in accounting, assurance, and consulting services. He is the chairman of GraceKennedy's Audit Committee, a member of the Corporate Governance and Nominations Committee, and the Compensation Subcommittee. Mr. Williams is a fellow of the Institute of Chartered Accountants of Jamaica and the Chartered Association of Certified Accountants. Please note that further details about all of the GraceKennedy directors are available on our website and in our 2022 annual report. All directors presented here have an excellent record of board attendance, board meeting attendance and participation. To the best of my knowledge, it is 100%. Gail? Sure. The board is satisfied that these directors continue to make a very valuable contribution to the board and have demonstrated their commitment to continue serving as directors. So we get to the section. May we have a motion that directors retiring by rotation and offering themselves for re-election, that is, Dr. Paris Loyi Jr., Mr. Andrew Masado, and Mr. Peter Williams, be re-elected en bloc.
Spoiled for choice. The group CEO.
Those against?
Is the
sorry, this is the motion. It's the motion. The group CEO moved, and who seconded? Who do you have seconded? Magian?
No, Mark Anthony. First.
So moved. We will now take the vote. Shareholders in the room, those in favor? Looks like it's unanimous. Those against? Thank you to the shareholders in the room. Shareholders online, I invite you to cast your vote. We now await the results from our shareholders voted online.
Grace, they move like a millionaire. The #1 brand, cause I know them care. Them off 101 ways for you to win. Best food, best price, now millions for your win.
That's right! Win a share of over 10 million in cash prizes and monthly giveaways when you purchase any 5 Grace Food items. Visit us on social media at Grace Foods or check press for details and move like the millionaire you are with Grace. Authorized under Section 58.3 of the Betting, Gaming and Lotteries Act.
Good taste and moves you. Grace bringing the food you love.
Again, we have 100%. The results are in and the motion is carried. The re-election of directors retiring by rotation. May we now have the motion that Paris Loy Jr., Mr. Andrew Masado, and Mr. Peter Williams be, and they are hereby re-elected directors of the company. David, and who was that in the second row? Is it Andrew?
This gentleman behind with the glasses on his head.
Sir, can you give us your name? So moved. We will now take the vote. Those in favor? Those against? Thank you to the shareholders in the room. Shareholders online, I invite you to cast your vote, and we now await those results. There you have it. You saw champs in motion.
Again, 100%.
100% again. The results are in. I declare the motion carried. We move to the section on directors' remuneration. May we have a motion that the amount shown in the accounts of the company for the year ended 31st December 2022 as fees to the directors for their services as directors be and is hereby approved by, and B, that the compensation subcommittee, a subcommittee of corporate governance and nominations committee of the board of directors, is authorized until the conclusion of the next annual general meeting to fix the fees of directors.
I so move.
Mr. Ellison? Yes? Mr. Mark Anthony Barton again. Seconded. We now take the vote. The shareholders in the room, those in favor? Those against? Mr. Staple? You want to make a statement, sir?
No, sir. He's voting against.
Okay, he just voted against. Okay, thank you, shareholders in the room. Shareholders online, I invite you to cast your vote.
It all starts with the power to dream. When we dream, we see limitless possibilities and discover the world anew. We know your dreams very well. We believe in them too. Founded on a vision to move banking into the future, our mission has always been to bring your dreams to your fingertips. Our premium products and services offer you a helping hand to achieve your major milestones, and we deliver them with the superior customer experience we've been providing for the past 20 years. We are First Global Bank, Jamaica's preferred digital bank of champions from GraceKennedy. But we're more than your bank. We are your partners in dreaming, and we remain committed to dreaming with you, working with you, building you up so you can go further. First Global Bank, go further together.
100% again.
There we have 100%. So the ayes have it, even if it is not unanimous in this case. I declare the motion as having been carried. The appointment of auditors. The auditors of the company, PricewaterhouseCoopers Chartered Accountants, will continue in office pursuant to Section 154 of the Companies Act. May we please have a motion that PricewaterhouseCoopers Chartered Accountants, having signified their willingness to serve, continue in office as auditors of the company pursuant to Section 154 of the Companies Act, to hold office until the conclusion of the next annual general meeting at a remuneration to be fixed by the directors of the company. Yes, ma'am? Yes? You got that name? Thank you very much. Moved. We will now take a vote. Shareholders in the room, those in favor? Those against? Thank you. Shareholders online, I invite you to cast your vote while we await their results. And yes, Mr. CEO, it's good to see so many new investors taking such a strong interest and wanting to participate in the process.
Grace coconut milk. It makes your rice so nice. Make Thai curry in a hurry and try it in your drinks and desserts. Grace coconut milk. Rich, creamy, and delicious. It's a taste the whole family will love. Bring the tropical vibes to your next family meal with powdered, creamed, or canned Grace coconut milk for the love of flavor.
Again,
100% again. There we have it. I declare the motion as having been carried. We are now in the home stretch.
Yes.
I said that already, but we're really very close. But I have one other item, but I wanted to break with the procedure and introduce a prize-winning book that was prepared by none other than Mr. Fred W. Kennedy, who is the chairman of our GraceKennedy Foundation and the son of one of the earliest CEOs of GraceKennedy and Company. Fred put together a really special book, an inspiring true story of family, business, and enduring love, and it's entitled Firstborn. It's the life of Louis Fred Kennedy, who was with us from 1908 to 1982. Firstborn is available both as a hard copy and a soft copy on Amazon. The book is also available locally at Kingston Bookstore and Sangster's Bookstore. All the proceeds of the sale of Firstborn are being donated to the GraceKennedy Foundation for the annual Louis Fred Kennedy Scholarship in Logistics and Supply Chain Management at the Caribbean Maritime University. Dr. Kennedy's book recently won a gold medal award for the Nonfiction Authors Association in the United States. GraceKennedy The GraceKennedy Foundation will be establishing an endowment fund in the name of Louis Fred Kennedy in the amount of US $200,000. There will be an equal contribution of investment to the fund by GraceKennedy Foundation and GraceKennedy Limited. Logistics and supply chain is a critical part of the GraceKennedy Group's business, and we are excited that this endowment fund is being established so that we can support worthy students in this field. Again, ladies and gentlemen, join me in congratulating Fred W. Kennedy. If you haven't gotten your copy, go out and read it. It really is compelling reading. Ladies and gentlemen, this concludes this afternoon's meeting. And to everyone who has attended our 2023 AGM, whether here in person or online, thank you very much for participating. Thank you very much also to the hard-working GraceKennedy team and the service providers who made today's meeting possible. You would join me in thanking and congratulating our Group CEO, Don Webby, for his leadership, and to recognize GraceKennedy's executive and senior management team, my fellow directors, and all our GraceKennedy team members across the globe for their ongoing dedication and commitment to the company. Together, we remain focused on achieving GraceKennedy's vision of becoming the #1 Caribbean brand in the world by 2030, whilst providing strong returns to our shareholders and improving the quality of life to our team, customers, and the communities we serve around the globe. Thank you all very much, stakeholders, for your continued support. Please have a great remainder of the evening. Thank you very much.